financial crisis of 2007 and 2008. And Chairman Powell, as we all know, has served throughout the COVID-19 pandemic and its aftermath, a period in which we've seen inflation reach its highest level in 40 years. As we've sat in front of Zoom screens over the past 2.5 years, I'll just speak for myself. Many of us have watched as our hair has turned grayer, but few of us have as good an excuse for this as Chairman Powell. We're delighted to have him with us today to have a conversation about key policy issues, what he's learned, and the challenges now facing the Fed. Chairman Powell, it's good to see you today, sir. Welcome.
Thank you very much, Peter. And thank you to, go ahead.
I don't a bit of a head fake on inflation. We heard policymakers ascribing the increase in price inflation to the pandemic and related supply disruptions. And while this has undoubtedly contributed, there seems a much stronger consensus now that it's been in larger part policy driven. Can you discuss for us or give us some insight into how your thinking evolved on this topic over the last 1.5 years and how those conclusions may have evolved as well?
So Peter, thank you. And Jim, thank you. And congratulations to both of you and to Cato on 40 years of great monetary policy conferences. So I think a good entry point for that question, Peter, is to start by recalling that before the pandemic, unemployment was at a 50-year low, inflation was low and stable, and the economy was growing steadily, with no obvious imbalances threatening continued expansion. So, of course, in that sense, none of this high inflation that we see around the world now would have happened without the pandemic. The pandemic severely disrupted the economy, gave rise to risks of much more dire economic consequences than actually transpired really. And that was thanks in part to the policy response. So to start with policy, there's no question that policy certainly supported strong demand. But in my view, you would not have seen anything like the inflation that we have seen without the pandemic effects. And those pandemic effects include both shifts in demand and also playing a role in, not solely causing, but playing a role in the supply side constraints that emerged. So as for the pandemic, it did lead directly to an extraordinary shift in demand away from in-person services and to goods. And that shift, of course, was a major contributor to inflation in goods prices, which was really the main inflation story at the very beginning when inflation broke out suddenly in March of 2021. It's worth remembering that inflation actually declined in the early stage of the pandemic and then suddenly rose up in March of 21. The pandemic also contributed to the constrained supply in a number of important ways, including a large and persistent reduction in the size of the labor force, which contributed to extremely tight labor market conditions and upward pressure on wages. Also, the turmoil in global supply chains was probably caused to some extent by pandemic-related shutdowns as well as strong demand, and particularly goods demand. I think cars are a good example. So yes, people had money and rates were low and demand for cars was strong, but also the pandemic shifted demand upward for cars because some people wanted to avoid public transportation. That amped up new demand for new and used cars. And also the shortage of semiconductors for cars emerged from pandemic-related demand shifts as well. So the bottom line for me is that there's really a role for both here, and the two are tangled up in a way that it's really not easy to disentangle.
Those of us who grew up in the 70s, I think that the danger and cost of inflation, can't be exaggerated. In September of 1979, his first testimony, a month after he was confirmed, Paul Volcker made clear he understood the damage that was being caused by inflation and the need to bring it down, even if it required great costs in other economic ways. One of the lessons of that episode was the greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the Great Inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. That speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do here.
I think that that's really important because it's clear that we could see, political pressure coming to avoid economic costs when there could be claims from political players that, inflation is back in its box, long before it is. Jim mentioned in his opening remarks that 2 years ago you moved to a new framework, flexible average inflation targeting, and I'm bringing this up now because, again, just reiterating the point about trying to sleep better at night. By many accounts, this move has created some more uncertainty in the market, as Jim mentioned, and coming at a time when inflation now has increased so markedly, it creates concern that despite your stated resolve, the commitment to price stability has become less strong. Should you consider modifications to this framework to assuage these concerns and better manage short-term expectations?
So the framework, we began the work on the new framework in 2018, and we announced the results in August of 2020. And it really followed 25 years, basically, of global disinflationary forces. And the problem was that monetary policy rates were close to the effective lower bound much too much of the time, much too close, and even during good times. So that meant that central banks were having a hard time all over the world, finding ways to support the economy when it was needed. And that's why central banks, including the Fed, resorted to things like forward guidance and asset purchases. So that's why we did that. But the changes that we made were sort of a very mainstream part of a literature around makeup strategies. But really the point of our framework changes, the point of all of them was to, and we said this very clearly, was to have inflation expectations well anchored at 2%. That the average inflation targeting idea was meant to support having inflation expectations. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses, and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short term expectations are higher because of high current inflation, and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
It seems to me there's a chance that there's a real risk that the labor market, that the labor shortages persist. Does that create a risk that takes some of the ability to manage this process out of your hands? To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging world for companies, and it will certainly create upward pressure on wages and that sort of thing. Today, the labor market demand is very, very strong still in the labor market. We're still printing new payroll job numbers at a high level. Wages are running at elevated levels, and so we think by our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get back into better balance, and that will bring wages back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve. The shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome increase in labor force participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have measures in place to support a strong labor market and high labor force participation. And that goes beyond what we can accomplish with monetary policy.
You've made some contrast to how things are different today. What's different today from the high inflationary period of the late 70s and early 80s. I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing people actually line up at the Fidelity office to see the monetary aggregates released on a weekly basis. And the way the money travels through the economy has changed dramatically since Milton Friedman first said that inflation's always and everywhere a monetary phenomenon. I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but that when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I graduated from college in 1975, which was close to peak monetarism, and there was quite a focus on monetary aggregates, and I recall it just as you do. So to go to this current situation, so as part of our response to the pandemic, we did resort to large asset purchases to address what were pretty severe disruptions in markets, and then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities don't actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way. Whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy, and we don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that. So that's where we would be on that.
That actually calls to mind, at Cato, we do have a strong aversion to a fully discretionary fiat money system. And so we do like to socialize and promote alternative frameworks that could move policy in a market direction that eliminates some of this discretion. Jim mentioned that a consistent theme over the years of this conference has been, potential monetary rules. And that kind of calls into question whether inflation and prices are really the best targets to use for monetary policy. Some folks have advocated for a rules-based system, such as targeting nominal GDP is something we've heard a lot about in recent years, partly because, as you say, monetary policy is not suited to address, well suited to address supply shocks. Could you share with us some of your thoughts of that type of approach and whether it's something that you would consider?
So more broadly on rules, of course, Taylor rules have become part of the fabric of economic analysis and particularly monetary policy analysis in ways that must be far greater than John Taylor could have hoped when he wrote his original article in 1993. So, but no central bank and the Fed has never explicitly tied our monetary policy decisions to any formula, including Taylor rules. But Taylor rules, nonetheless, are ubiquitous in all of the work that we do. You have to have a variable, or a way and a model of explaining how monetary policy will react, and some kind of Taylor rule is now very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this is a lot of well-known experts, many of them at your institution, do support nominal income targeting. And I'll just say that, we've looked at that. I've looked at that and really come to the view that that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
and one thing I would interject is that we have debates internally as well, and I think for us the concept really is more wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again remove discretion.
I think that's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to, is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is, and part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's a level of complexity that even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put that, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years later, we may have a very different view. But it is broadly understood, I think, or thought that trend growth has declined considerably rather, over the course of since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, just big chances of policy error, because we just don't know these things with that kind of, we don't know any of the starred variables, so to speak, with that level of certainty. So I'll just say, really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint, and it's not something that we have chosen to do or that we are currently looking at.
You mentioned a dual mandate. I don't want to ignore the unemployment rate during this conversation. When I said earlier that, we obviously have an aversion to a, fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So, Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment and price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say that and have for some time, that non-monetary factors are really what drives the level of maximum employment, which clearly changes through the business cycle and over time. But we can and do assess that, and we do it transparency, and Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
You stole my follow-up, because you started out saying Congress sets the mandate, and so my follow-up was going to be, well, should the mandate, should they consider changing the mandate? And I think you've answered that. But I guess a natural follow-up might be then that if the dual mandate weren't enough, there's been talk of adding more elements to the Fed's objectives, including like racial equity that seem far from the Fed's ability to address. In addition, the Fed's remit has expanded from the banking system to the broader financial system, and its regulatory responsibilities were widely expanded in the wake of the financial crisis. How does continuing expanding the Fed's mandates not undermine focus on that fundamental responsibility of monetary stability, beyond things such as the employment element of the mandate?
So I think our current mandate is appropriate, and I would not want to see it narrowed or broadened, for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue. And what we've gotten with that is a precious grant of independence that lets us pursue those goals without direct political control. For monetary policy, that's maximum employment and price stability. And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or of Congress. And if we do that, if we do stray from our core mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well. And I think that's pretty well documented and accepted.
I mentioned a couple of times, our concern about a fully discretionary system. And one of the biggest of those concerns is that in the face of, large economic dislocations, we've been running, what really amount to unprecedented experiments. I would cite the, quadrupling of the Fed's balance sheet in the wake of the 2008 financial crisis, and then, doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Could you shed some light for us on where you hope to take the balance sheet over time, and what's the way that you really try to get there? Do you see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June. Once it's up to full speed, the process began in June, and the pace of the balance sheet increases actually rises this month. The plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large-scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And again, we think that the current system works well and provides a lot of liquidity to the system, which is kind of a net gain.
All right, I thought it might be time to shift gears a little bit away from inflation and monetary policy. I remember the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement a digital currency. And I was kind of horrified at the privacy implications of this prospect and said so in a letter to the editor at that time. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences, but the Fed has stepped into this arena with a discussion paper on a central bank digital currency and several speeches from Fed governors. Our team has reviewed the more than 2,000 comments that the Fed's central bank digital currency discussion paper received, and we find that about 2/3 of them are concerned or outright opposed to the idea. Commenters raised concerns of financial privacy, financial oppression, and disintermediating the bank system, some of the same concerns that led me to write that letter to the editor 7 years ago. How can these serious concerns about privacy and freedom be reconciled with a digital currency?
Let me start by saying that we haven't made any decisions at all about whether to issue a CBDC, and we continue to evaluate the pros and cons and look at the technical questions and the policy questions, and we expect that evaluation process is going to take some time, appropriately so. Secondly, I'll say that we do not intend to proceed with issuance of a CBDC without clear support from both the executive branch and from Congress, ideally in the form of a specific authorizing law. So it was very gratifying, 2,000 and some comments. And, I won't tell you that I've read those, but I've read all of them, but I've read some of them and I've read the summaries. And, it's a lot of very thoughtful concerns, including the ones that you raised. And there are things that we're considering very seriously. So we in our own paper, we suggested that a CBDC in our jurisdiction should be privacy protected, intermediated, widely transferable, and identity verified. So on privacy protection, let's start with that. Very, very important. We all see what's happening with the digital RMB. and you know, and the issues with privacy. We would not want a world in which the government sees in real time every money transfer that anyone makes with a CBDC. That would not be something that would be at all attractive in the American
Just the
context.
golden
So
crosses,
privacy
yes.
protection is going to be extremely important, and we're attentive to striking a balance, of course, between law enforcement
Yeah,
and
I see
privacy
he's trying
protection.
to
But
talk in
that can be
circles as much
managed
as
in the same way
possible
that it's
right
currently
now.
managed in the banking system, or in some similar way. Um, in terms of another issue, really is disintermediation, and you know, that really is a question of, if say you had an interest-bearing CBDC, it could be attractive. It could compete with deposits, could draw deposits out of the banking system. That could limit credit availability. That's another issue to be managed. I think one of the things that actually that Cato mentioned in your was also the run risk issue, and that is the question of, are you creating an asset that would be very attractive in, you know, in a panic or severe stress situation, and you know, fostering runs. So look, it's going to be, as I mentioned, it's going to be, we think our role is this: we want to carefully and thoroughly analyze the public policy and technological challenges, public policy trade-offs and technological challenges. That's what we're doing. The idea is that this will lead all of us to a better understanding of those trade-offs and prepare the way for, hopefully, a well-informed decision on whether and when to issue a dollar central bank digital currency. That's what we think our role is, and we think that the Fed is the right institution to do that. We can proceed without, you know, we're a nonpartisan institution, non-political institution that we can do these things, and I hope present conclusions and analysis that will support an intelligent decision when it's time to make that.
Well, this is something we'll definitely be having a lot to say on in the future, as well, particularly from a perspective
Snap
of,
has some
you know,
tasty OI this
privacy
week.
concerns. That's being a watchdog on those issues.
That's not
Is a
Snap.
very important role for Cato.
Interesting.
I do want to ask about cryptocurrency, you know, but first I should probably, in fairness, reveal that the gentleman who photobombed Janet Yellen 5 years ago by holding up a buy Bitcoin sign behind her during her Humphrey Hawkins testimony earlier this year became my son-in-law. So that's a little bit of a disclaimer I'm going to put out there. But without debating the merits or future of cryptocurrencies generally, or one or another crypto products, I'll say that in the monetary arena, you know, Cato stands for nothing if not a desire to see more interest in monetary policy, to see more people concerned about our discretionary fiat system. And also, we want to see private market innovation and experimentation in developing alternatives. And crypto is just such a great example of this. There's a long history of government and regulation thwarting such innovation and experimentation, which you know, we find really disappointing. So I wonder if you could respond to these kinds of concerns, namely that, you know, regulators might ultimately strangle you know, crypto to the extent that it really does develop into a viable alternative system.
So I'll talk about it in two pieces. One is unbacked cryptocurrencies as such, and you know, those have not and don't appear to offer, have not offered and don't appear to offer much in the way of public interest in using them as payments. Let's say it's really it's not a great store of value. What it is a speculative asset. It's not backed by anything.
There could be an argument that that's still during the development phase, and that it's something that we could see emerge. But
yes,
be that as it may.
And I also have close in family members who offer that perspective vigorously. So, as you suggest, but stable coins is a different thing, and you know, the question is, are there forms of private money like stable coins which can play a role in our financial system, which would, and the answer is, of course, that we don't want to stand in the way of appropriate innovation, particularly including you know, digital innovation. But we think that something like that, which is, you know, purporting to be money, would need to be appropriately regulated. And you know, I hear that wide agreement on that, by the way, from a lot of the stablecoin companies now are seeing that as part of getting to a place where they are a legitimate part of the financial system. So I think you need regulation. If people are going to think something is money, then it needs to actually have the qualities of money. And you know, if it doesn't, then you don't want I don't think you want to take money and make it into just another consumer product where sometimes it fails and sometimes it's good. You want it to be guaranteed to be good. If the public's going to look at it like it was a dollar,
What?
you want to have clarity,
Oh
transparency. You
shit.
want to have full reserves of very
It's
liquid, high quality
It's
assets
okay that I'm muted
and
on
things like
Discord
that.
because
That's
I
all.
haven't
So
said
I
anything
think
yet.
we need legislation on this. Just, it's typical of technological innovations. There isn't a regulatory framework that really gets after payment stable
money should be
coins.
money.
Uh,
It seems
and so I think that's what's needed. But I wouldn't
Jerome
think of
likes to
us
put
as
his
being opposed to that
allowance
kind of
in his
innovation. We're more
pocket
the
and
people
go
who
to
are
the
saying,
candy store.
among others, that we need appropriate regulation.
Yeah, it
MG's doing
doubles
pretty well this
ultimately in the
morning.
details. I mean, while we have these debates, I mean, we would concede, we're living in a world where we will see innovation, and we've basically promoted, a light touch, market focused approach, because there is a real risk of again, having an impact on the development of these innovations and really thwarting what could be very promising and useful innovation.
No, and I agree with that. We don't want to be in that place. We want to be in favor of innovation, but also of appropriate regulation.
Mhm. And ultimately, some of the people who end up driving, the regulation might be, as you mentioned, legislation. The end product may not meet the objectives that you and I both say that we want. Another topic, as long as I can remember, successive chairmen have warned of our unsustainable fiscal path. Regrettably, no one in Congress or the White House seems to be listening. I'm, particularly during a period of high inflation, I've been, continually chagrined at, the number of big spending bills that continue to come down the pike and legislation that's passed. Long after I think the crisis of the pandemic has ended.
Playing this
The
gap
lessons
fill
of the
on
financial
SPX
crisis
is
and
the
COVID
best.
might be that keeping our fiscal house in order is essential as preparation to meet the challenges of unexpected but inevitable, economic dislocations. But the opposite lesson seems to have been learned, that we can keep spending, whatever we wish without worrying about a day of reckoning. And I just, I'm very concerned about the day of reckoning and what risks we're laying for the economic well-being of future generations. And I just wonder, your thoughts on those concerns and the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in
Tesla
America.
alive?
So
Wow.
I do share those concerns.
Tesla's
And in
down
fact,
this
I
morning
was working
still.
on those issues before I joined the
Coming
Fed. But
back.
at the Fed,
I'd
my
actually like
position
to see Tesla
needs to be
bounce a
that
little
fiscal
bit,
policy really is the responsibility of Congress and the administration.
so I could get
Wouldn't
some
be
short
appropriate for me
positions on it.
to comment too much on specific policy proposals or laws. More to the point, with inflation running so far above
I think it's just
2%,
rising with the
this is
market.
probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get back to a sustainable path sooner or later. To your point, sooner
I
is
didn't
better than
exit
later.
cat.
And I guess I'll just leave it at that.
I should have.
Thanks.
But I didn't.
We're getting close to the end of our time, so I'm thinking about a closing question. I wonder, with everything that we've discussed thus far, what are some of the key lessons that you've learned since you became Fed chair, and what advice might you give to a lot of the young, monetary scholars out there that Cato and other places are working to develop?
So I guess I would say that both experience and also studying history are great teachers of what can be hard lessons. And I actually mentioned 3 lessons at Jackson Hole 10 days ago, and those were first that the Fed does
Only
have and
364
accept responsibility for price
working
stability.
thumbs among
Even now,
1,500 watchers.
some are
If you guys
questioning that, but
could
that to
drop a
us
like,
is
I
settled.
appreciate it. I know I
Secondly,
haven't
that
said anything
inflation
yet this morning.
expectations are really
Fubu
important
has
and need to be
1.1 and
carefully monitored
1.2 million
because
FTD
if they do move up, they
7485.
can make the job
Ah,
of
no, I
getting
got
back to price
stopped
stability
out.
so much harder.
Oh well.
And third is that, the record is there is a record of failed attempts to get inflation under control, which only raises the ultimate cost to society of getting under control. Hence the need to do this job now and keep at it. So those are 3 lessons. I would say more broadly, another really fundamental lesson is, to me, is that the structure of the economy is ever changing and highly complex. And we see that today around the world. Many nations are experiencing the first high inflation in 40 years, all around the world. Different countries have different composition and backstories, but it's really quite global. And the question really is this going to be a temporary thing that's really related to the pandemic in some way, or is there actually something more structural and persistent happening? For example, if we're moving to a world where we're going to see more frequent, larger, and more persistent supply shocks for whatever reason, that will have critical
I
and
can't figure
difficult
out the
implications for
takeaway
the
from this
conduct of
interview.
economic policy and monetary policy in particular.
There
So
isn't one.
this is not possible to know right now, but it's certainly a question that looms. I mean, to me, to sum it up,
I'm not going to show you my
I would
birth
just say
certificate,
economics is not physics.
Sage.
There isn't any specific temperature at which the economy boils over. It does boil over from time to time, and when
WeBull
that
account
happens,
doesn't
it
have
often
an
takes many years
SPXW
of
ticker.
analysis, discussion, and
Do you know
debate
why?
to reach general agreement on why
No?
that has happened. So the point is that we are always making monetary
Do you
policy
just
under
mean
high
SPX?
uncertainty
It's just
about the structure
SPX.
of the economy and the path ahead. That makes our work challenging. It also makes it getting it right very important for the people that we serve, and we do think about that every day. So our understanding of the economy has to
Yeah, no
evolve.
problem.
As the economy evolves, as time passes, we do learn more, and I think it's okay to follow the evidence
Okay, I got a
and
note.
change one's
Jpow
mind.
says,
I think
watch
that
for a
advice to
signal coming
scholars young
soon.
and
The
old
idea of getting
is
civic
that people
coffee from
shouldn't be afraid
Jfresh
to
was
say that they've
bad.
changed
Okay,
their
but we
view
got
and
to use
explain
it.
why.
So
I
there's a
actually
cup
find that refreshing
fresh from the
when
litter
people
box
say,
on your desk.
my view has
Oh,
evolved in
Chris.
the face of the evidence.
Please sign off my
I
travel
guess one
expenses
more
from
word to close
yesterday. Ignore the
for this
Rolex
young
item.
researchers you mentioned.
All right,
And
that
this
shouldn't
is a
be too much
commercial
of a problem.
for
Thanks
public
for filling
service
me
and for
in,
the Fed.
Fed.
So the Fed is a very
Have a
special
good morning,
place
man.
where
Or night
people can
for you.
combine policy research with policy making. This is a place that has, all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is
At
to
least
serve
the
the
Jackson
public,
Hole is still
and it
valid.
really matters. Our work
This is
really
the
matters to the
takeaway.
public.
Nothing changed.
I would say there's no
I mean,
higher
that's
calling
bullish though,
or more
right?
satisfying mission.
Like as long as he doesn't say any
I
new
hope that
bad
young
shit today,
researchers and economists
the
and others
market's
will
probably
consider
going to
public
go
service as part of their career. For me, it's been only a part. But in particular, consider working at the Fed, where you'd be most welcome.
Thanks for that. I mean, I share those sentiments. As you know, you mentioned your work at the Bipartisan Research Center, and I'm at Cato because I care about the future of our country and the future, of course, of liberty and freedom in America, and for the kind of world future generations are going to grow up, and whether they're going to have the same opportunities that we all have had to live in a free country and to pursue their American dream, and being part of that is a real privilege. I know, at Cato, we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We wish that, we think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations that would prioritize this policy area and raise their level of resources dedicated to this area. And as you know, Mr. Chairman, Cato is not shy about being critical, and we enjoy intellectually
I just remembered to like the stream. Hint. Thank you so much, Amy Lewis. I appreciate it.
That we share common goals and objectives for our country, and it's
y'all need to get over that he's boring as fuck, and just realize the words coming out of his mouth determine if we make attendees. You're not wrong, Carl.
It's within that context that they occur.
And yes, Trash, it is hyper relevant
for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
Thanks, Peter. The pleasure is mine too.
Thanks so much. And with that, I'm just going to let all the viewers know that we're going to be taking a break
So Powell didn't fuck us, which is cool. And slightly bullish, right? Normally, how many days from the OPEC date does OPEC settlement begin? From September 16th. Most commonly on the T+2 day, the beginning of the T+2 day, which is opening bell on Tuesday of the following week. Although on 2 occasions it has been on the morning of the following Wednesday. Okay, Snap's hitting its stride on the gamma ramp, which is quite good. I think my calls are up like 130% right now. Waiting for this gap to fill on SPX. And then I'm not quite sure how I feel about the call side on that anymore. Although the earlier move was kind of nuts. Straddle did good. I sold 5 more of my 4150s at market open today on the gap down. So I still have 10 of those left, and then the upside hedge I'm still holding from yesterday's close, which is down a little bit, but if we test 4,000 it'll be pretty good. So we should get out of puts, depending on how far dated they are. I'm going to use the small rally that could occur over the next like 3 trading days to mostly reposition into new puts, or at least that's my plan. If Jpow runs for president, I'm voting for him. Delta on Fubo 4C weekly is negative 74. Such little faith in it getting to $4. It's having like a pretty good morning. Delta on $4 weeklies is 0.31, which is terrible, but very, very cheap if it gets there. There's like a part of me that just wants to fucking load up on these. You got to remember that's a big percentage move, but Fubo's kind of rocketing. I'm gonna gun it. Let's see what happens. Big at about 30 of these. Ooh, the gap's filling. Stopped out on that. That's not the right option. Apple. I'd like Amazon to climb a little bit higher before getting new puts on that. Although 130 is not bad. February 21, 125s. Couple of them. Right? Yeah, just wait. Ice cream sandwich. Welcome to Cornichon, man. Thank you so much. Effin, thanks to you, Girk. I learned highly risky plays to make money and lose money. Thank you. Thank you, Effin. Burtnum, thank you so much for becoming a zillionaire, man. I appreciate it. Hit me up on the Discord.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon wind. Praise be to RC and the BY, please, cause I need G and me to move soon, man. Got the man GG on the CNBC saying that he ain't seeing no collusion. And we might be apes, but we ain't that Joe. Motherfucker, trade this is popcorn code. When the Citadel fails, I'ma buy my own boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult.
So stop on these. Oh, that could fall quite a bit before it gets stopped out. I'm pulling back a little. SPX. Okay. How do I go long on hearing damage? Oh shit. Sorry guys. I had to turn Powell up. He's a soft-spoken man. Let's try this J-Fresh Civet coffee. Fresh. Very fresh, Bithead. Don't listen to that guy. Your mic is still too low. I wonder if now would be a good time to play the upside of Amazon. What's AMD doing? Okay, starting to pull back a little bit. SPX just gapped up. Fill? Yeah, it filled. A little bit of momentum picking up here on the SPX. I feel like I should bump this stop. Oh yeah, I can just do it here, right? Won't let me do it. Ew. How are those Fubo calls doing? They're down 27%. All right. Snap got stopped out. Apple did not. Oh, I have 2 weeks on Apple. I can buy more Apple calls. Well, I'll wait a minute. Buy a couple more here. Really? It's just the same fucking price. Okay. I'll take it. Ribbon's still running. Yeah, I don't understand why people are buying it. Sup Gork made $8 on a spy pit, so you can say things are pretty serious. Nice, man. Congratulations. Let's go Revlon. Ooh. Okay, I'm out of Snap now. What? What? Dork, Revlon's still marking the beast. Fubo CCs? I don't think it's fucking worth it. I mean, I guess you could, like, 916. No, that's Revlon. Fubo. 916s. Barely worth it. I mean, yeah. I suppose if your cost basis is under 4, it doesn't fucking matter. Let me look at that gamma wall. Come here, Fubo. Fucking skews pricing in a 1 week move to 440. That could suck. What's the upper bound probability? There isn't one. 1 month, there's a 24.6% chance of hitting $5.20. Should be amazing. Yeah, IVs just dropped off a lot on Fubo over the last couple days. Gex. Let's see. Past the flip point, right? Gex flips at 285. I don't think we dropped low enough. Standard deviations 440. Just shitload of call volume at $4. I don't know. I wouldn't risk it, honestly. Like 9.9 seems pretty safe. 9.16 sort of safe. Negative 414,000 gamma. Or net gamma at the $4 strike. So yeah, I mean it could be okay, I guess. How are puts? What's put pricing? Is put pricing better? A little bit. You think we'll see Fubo below 3 again? I mean, there's a lot of buy pressure at that price. With apparently T plus 35 rolling in tomorrow for Bobby, do you think we may see any upwards action over the next week? T35 from what for Bobby? T plus 35 isn't like a thing. It's like just 35C. Thoughts on SPY testing 400 today? It looks like a pretty good setup. We'll see. I want it to move back up to like 3980. If it can cross 3980, I think we have a pretty good shot at 400. But right now, like this is, it's not super fucking bullish. We'll see how the recovery is in this range. Yeah, maybe just even 3978 would be okay for a test of 4,000 or 400. Right now, there's like a small trend here to break up. Go, Jimmy, go. Some problems with that. Peter Piper picked a peck of pickled peppers. A peck of pickled peppers Peter Piper picked. If Peter Piper picked a peck of pickled peppers, where's the peck of pickled peppers Peter Piper picked? I don't know. So GME Gamma Flip is at 2614 now. There's not a lot of put volume above 25. Like it's put volume above 25 is less. So Jimmy can kind of move from 25. Maybe if it hits the gamma flip point, that's kind of good because that means that the market maker is going to start buying into the rising price. So 2614 is actually kind of critical. I'll mark it. I know the Greek neutrals were kind of fucked up this morning. So this will help a little bit. Ooh. More Apple calls. That's much cheaper. No. I need to figure out what to do with these Rev 650s. I think I just let them get assigned, right? Like Revlon's not going to fall below 6. Well, I'm probably not going to get assigned on them actually. Oh well. Yeah, I'll just let them expire. My 24cc weeklies are up 24%. Should I take profit or ride the knife's edge and see what happens? Mine are up a little bit too. I don't know. It depends what strike you have. At 24 and you're up. I probably wouldn't risk rising price. Like especially when they open in the money. You can buy a farther, so just so you know, you can create kind of like a shitty credit spread If anybody's ever facing assignment and you can't afford to buy back your calls, sometimes you can afford to buy calls at or slightly above the strike that you sold calls at for the following expiration. Just a making money fan. I don't really like sports very much. I just don't think I'm gonna get assigned on them. But yeah, I'll just hold them in tomorrow, whatever. I'm thinking sideways for the rest of the week. Puts drop everything into OPEX next week. Then VUPs following. Does the market cycle bullish for non-primary elections? Wait. Can you say the second half of that? I don't think we're going to move up a lot this week. I think we could go pretty sideways. We'll see. Call interest is picking up this morning because people are bullish. That can help us out a lot. I should have kept my goddamn $4 calls on Fubo. Oops. Doesn't look inherently bullish. Maybe if it can cross VWAP again. Is it above or below VWAP? It's just below. There is no VWAP because day nights on DX. That's annoying. Should add another EMA ribbon. I don't think I can. Bearish breakdown. Peter Powell picked a peck of gherkin Volkers. A peck of gherkin Volkers Peter Powell picked. If Peter Powell picked a peck of gherkin Volkers, what's the tendies for gherkins, pickles, picks? What are we, fucking Dr. Seuss this morning? Just... What's up, TV? Alright, small breakdown. But maybe just back to that level. Could be more sustainable there. My cat chart just got promoted over BBBY. End of fuzzy towel era is nigh. Okay. How long could GME go before OPEX at this point? Or how low? Depending on call buying over the next like 4 days. I mean, the low end range is like probably 2250. But we need a market downturn to hit it. If that makes sense. Oh, did it bounce? Nice. Bull market's back. Let's go. So right now, the market maker on GME is selling into rising prices. Okay. Oh, piece of shit. Hold on. There we go. So the market maker on GME is selling into the rising price, which makes it really hard for the price to go up, right? Whoa. But if GME crosses and holds above 2614, market maker will start buying into the rising price. That's where the gamma flips positive. Net positive gamma means more stable upside, less volatility. PT for long-term SPY puts, 38.50, which we didn't hit. I've sold some of them. Like I've taken more than enough profits, right? I bought 41.50s when we tested 42.10. So I mean they're way the fuck up, but I would like to see it fall lower before I sell the rest, ideally. Right now I have in the money, well, I'm about to have in the money. Yeah, I have in the money calls and in the money puts on SPX. Yeah, Fubo is going burr. Get back into the shitty weekly options? Maybe. I mean, they're only a penny more than they were. Ooh, 2 pennies more. Apple's moving up. All right, cool. Watch the price drop after re-entering. No, this push up on SPX should be pretty strong. Like remember I said I was looking for us to like cross like 39.78, 39.80. We can stabilize on this upside range and then move up even higher. Can you afford that? I'll be okay, I think. Thanks, Mr. Little Pickle. You predicted possible rev move today, tomorrow, right? It was yesterday, today. Potentially. So, I mean, there's not necessarily a move. It's just 35 days from the big volume spikes on October or August 1st and 2nd. Is Jimmy just going up with the market? Yeah, for the most part. No, this isn't them buying back. First of all, ETF FTDs are not what cause OPEX. Not really. There's not volume on SPX per se. I bought Apple calls this morning. It was a good choice too because of the overnight drop. So I got calls like back at yesterday's cost basis, so that was pretty good. And I sold them like 30% up before close last night. What price did you enter a long position on SPY or SPX to just hold and maybe sell CCs on and chill? I'd probably start selling CSPs on SPX and like the 3 350 range. Provided it found a floor, like I don't know, I probably wouldn't buy it if there was a continued downtrend. Snap going again, cool. Yeah, I already made like 100% on Snap. I was out. There's like there's not really very much call delta, and there's like a decent amount of put gamma at 13. So I don't want to fuck with the $13 test. So I just sold. I think I got out at like 100 and it was like 116%, something like that. It was good. But it's over. Well, it's not over. I mean, it could keep running into next week, but I'm not in it. Yeah, I know about the 12 COI for next week. I might buy back in after the weekend, but not really interested in buying more today. Does FOMC on September 21st cause any issues for OPEX? Not if we're already running. Were you in Snap before this AM? No, I just bought in the like first thing this morning. $12 calls when it was trading just under. I think they were $20 cents each. And then I sold them at like 45 cents each. 42, well, 42.50, 43. I crossed at the bear crossing sign and I was blindsided. I'm sorry to hear that, bipolar bear. How's their car? I'm not seeing the 13p gamma and Snap. So 1250 has negative 484,000 negative gamma. 13 has negative 149,000 negative gamma. And then 13 for next week has negative 1.193 million negative gamma. But the market maker is buying into the rising price, right? So market maker is positive gamma on Snap. So if there's enough pressure, it can keep rising. It's just that 13 is kind of a big fucking wall. GME's so close to 26.14. It's getting there. This isn't super bullish, but it's okay. A $26 breakout. It's technically an ascending wedge, and its volume is reducing, which is not ideal. But if the market pushes up here, it could be enough buy pressure to continue moving up. A hedge flip would be really good. Very, very bullish. If FUBO breaks 4, does it rocket? I mean, it'll move if it breaks 4. I don't know if it'll rocket. I think SPY could push up through 400 if we see continued profit taking. So this morning was another opportunity for puts to close out that are deep in the money. The problem is a lot of the deep in the money puts are being held open right now. They're not being repositioned a lot. Like we saw some repositioning yesterday, but most of it was like, well, a good portion of it was like weekly and bi-weekly calls. A lot of the like later September, like September 30th and October 21st, puts are staying on the chain, even if they're in the money. So they're not moving them around a lot. Push through on Jimmy, push on through to the other side. Cat recovering. Yeah, DJI is starting to move up a little bit too. Do you think the price rise in GME and after hours was people actually being bullish? I think it was just the market maker hedging up. Anytime there's news, right? And you'll see it on every stock. The market makers they just go to neutral, right? After market close, any news, the market maker will just snap their position to neutral, and then they don't give a shit what happens, right? So a lot of that like aftermarket like sudden burst of price action you see on news like that, that's what that is. There's funds that buy into like filings and stuff like that, but they're smaller. Okay, we've got a flip. Let's see if it holds. Technically, this is 1 penny lower, which is irritate me till I fix it. Buyback covered calls, or is that being hasty? I guess you could if you want to. I'm not really concerned with like a small rally here. You still have a position in Apple? I bought back in today. You haven't bought GME calls yet for OPEX or this run, right? No. I might sell some more covered calls at the top of it. Does this push us from a negative hedge to a positive hedge? Briefly. Just because we have a positive hedge intraday doesn't mean it's gonna last. Cat gonna do the same thing as it did yesterday? Maybe. I'm still in my cat position. So I'd be very happy with if it moved up to like 82.50. I always fuck it up when I try to scalp on a GME run. Can you let me know when it peaks so I can sell CCs? Thanks. Right now, the most likely peak is, let's see. The most likely peak is like 27 through 28. 27.50 is a bit wonky, but there's also quite a lot of put gamma building up there right now. So yeah, a little rough. 27, yeah, 27.50 is like kind of more bullish though. 27, 27.50, and then 28's pretty negatively skewed. So I would say there's like a pocket there that we could get kind of stuck in. Like maybe enough to pull us over 27, but probably not enough to push us up past 28. We hit 26.14 and didn't go straight to $1 million a share. What the hell, shill? Sorry. Just because you didn't put in a big bet doesn't mean this thing won't run. Okay. I mean, if it started to run, I could put in a big bet. I don't know what the fuck that has to do with anything. Are you being like unreasonably bullish again because earnings was yesterday, Superman? You get like that. There's still a lot of super stonk just all over you. What's the best way to manage emotions during times of heavy volatility when a lot of gains are on the line? Don't look at the money. 35 CC for 923, somewhat safe. No, that would be selling into the OPEX period. That's super fucking risky. If you hedge it, sure, but otherwise I would stay the fuck away from it. Someone with $28 cover call is expiring tomorrow. Thanks for saying it'll be tough to push past 28. Man, you guys really took some covered call risk going into fucking earnings, having not bought them back yet today after the IV crush. And like the IV crush this morning was sufficient that any call sold above 25 last night would have been down this morning. I sold like 30s and 35s, so I don't give a flying fuck, but that's on APRN. Dog water or some potential. It's interesting, I guess. The share buyback thing's kind of curious. I don't know when it starts. That information seems to be kind of elusive. I sold 70 $28 calls and bought them back this morning for a 50% profit. Come on, you can do it. This is a big deal. Let's see, I'll show you guys here on TradingView. Nope. This resistance is a huge deal if it breaks the upside. Although this could also just end up being a double top. It's starting to break it a little bit. Did you get out of your SPX put position? No. I sold like 5 more of them this morning at market open, but I still have 10 left. How's your neighbor? Do you like starfish? My wife will let me kiss her brown starfish, even though all of the kids are eating it. Also, Jason Allen needs help. Who? Fucking Kendro. The only other long-term downtrend I'm seeing is up at 410. No way we push that high, right? Oh no, we could push that high. Absolutely. Say something bullish about Rebecca. Well, everything else runs but her. I'm not sure what you want me to say there. Fubo, you could have written fucking a Wall Street Bets DD about Fubo at 350. Fubo's not really like a squeeze play though. It's very liquid. I now know why the USA puts so much accent on the 25,000 PDT rule. Having 25,000 in your account really helps with making money. It's much easier than having only 5K and taking on more risk. Oh yeah, it's way better. Fubo's my one shot at not being a degen. Oh, I don't think Fubo's gonna solve that problem for you. So you see how now that we're like over the gamma flip point, the sell-off in the market isn't causing a rapid sell-off on GME. Below this flip point, the market maker would be selling. They'd be selling into the falling price, right? And so that would accelerate the downside. But above the gamma flip point, it stabilizes. Oh, sorry. The Fubo Tensi you have for this Jan not a squeeze play? Not really, no. I mean, they're just like if we get any OPEX action for the most part. I'd probably get rid of them on like a test of like $5 or something with sufficient volume. They're mostly just volatility. Is the gamma flip point gamma neutral? No. Because it's weighted to the nearest expiration. Do DD I can read about the Fubo thesis? It's in the Dillionaires Discord. Do you think the VIX will pop at some point? It seems dead. Also, you're muted. You muted me on your sub for jokingly criticizing you, but I still love you anyway. I muted you? What the fuck is muting? I would have just banned you. If the market comes down hard, the VIX will pop. But there's still massive short positions on the VIX. Like VIX is still getting suppressed really, really hard. Would you consider that a double top on SPY? Not until we hit 401. 401 would be a double top. We still have a little ways to go to the upside. You're talking about out here? Yeah, I think we have a little ways to move up still. Banned from posting comments for 3 days. Frankly, I probably deserve it. I have no idea. Can I'll remove it from you. I don't care. Were you saying asshole-ish things? Is the bolometer and femtometer back in sync? I don't know. You tell me. I'm not currently bullish on GMA, so he insulted your espresso machine? Oh, he definitely should have been fucking banned then. Fuck that guy. You're reasonably bullish on the SPY hitting 401. Yeah. If it breaks 401, we may see like 407, 410 before next Wednesday. It's okay, Rebecca. You do your own thing. Take all the time you need. You just gotta be patient on Revlon. It's not GME December 2020. It's like GME like late September, October 2020. Continued listing on NYSE is probably a big catalyst. Or it gets delisted. Oh, and can all of you guys stop reposting DD from shitty subs on the fucking Reddit? Thanks. Fluffy, can we get rid of cross-posting? If you can't write a fucking DD on a stock, you shouldn't be talking about it. Fuck yeah, we can. Yeah, get rid of that shit. Joke's on you. I'm gonna copy and paste. Fine. At 25 shares of Amazon, I'm dying to get rid of. Cost basis 138. Fuck. Why would you buy Amazon at 138? I don't know what to tell you, Tyler. Hmm. Why not explain why the DD is invalid? Because I'm not your fucking personal DD barometer. Please give a shout out to my boy Mike Peters. He is a hunter and picks up chicks by asking to pee in their butt. Has it ever worked? What's up, Mike? How's AMD looking? Solid? Or my $80 calls look very nice. Is there a problem with it? What happened? No, it's doing ops. I would like to make a formal suggestion before Gherk Assembly that the human name for Fubo, in line with Jimmy, and Rev's Rebecca, shall be Fubert. Huh. Fubert. Thank you, that is all. I don't know if I can argue it. I think we should call it fellatio. But Fubert's fine, I guess. Wouldn't spy test 401? We'll see. Imagine Mike actually married one of his victims. Well, I mean, if it was consensual butt peeing, I mean, I don't know if that would constitute a victim attacker type relationship. With the Queen of England being ill, do you think the markets will tank before she dies? If she dies? No, why would anyone care? Do you see more downside for GME before OPEX? Would like to roll some CC profit into shares. Not sure if I missed the bottom. Thanks as always. Probably after SLD next week. a best shot at capturing some more downside? Fussbort? Fubo Sport? So Fellatio Sands is out. Okay, you know what? We'll do a poll. Booty. I just want to say with Rebecca, Jimmy, and Bobby, there's really there's no ethnicity in the names for the stocks. Fuberto would be a good ad. Fuberto could be racist, giving Fubo is soccer centric. Is it? Yeah, I don't think it is. It's got a pretty even mix of basketball, football, and soccer. It's an homage. Yeah, exactly. Just don't start making up nicknames for SPX and we can avoid any, like, relevant racism. No shares in the moment in Fuber, just Jan 24 leaps. Do you think there will be some VUP to get those to print decently? Or would shares be better? I think there'll be opportunities for VUP over the next 2 years or year and a half. I don't, but I've heard lots of people call it that. It's a pretty common like nickname for SPX, and it's terrible. Fubella. What is the SPX nickname? Just say it phonetically. How long do you personally think this rally will last? Going to try and time the time of this rally to exit Amazon. Couple more days, Tyler? SPXE? Kind of like your nickname in college was the tripod. Only you called me that, Carl. You just kept trying to make it a thing. Couple more days of SPX up, then down. I don't know. Tapping 401 right now. Yeah, probably into SLD. So there's a little bit of call gamma built up on the chain for this week, which is bullish. Next week still pretty put heavy. Thanks for what you do, man. You're giving us the tools needed to get out of this rat race. You recall how much you were selling Fubo CCs for last year? You think they'd sell for about the same when it's not undervalued. Jesus, there were points last year where Fubo CCs, like Fubo's IV was at like 150, 180%. So covered calls on it were insane. I think if it gets back up to like $10, $12, covered calls on it will be very much worth it. Even like a couple weeks ago, or like last week, covered calls were still really decent while IV was high. Hmm. Tell me War of the Worlds the way I command this tripod. Thank you, college age Girk. Ooh, BTU's under 2350. That's kind of hot. What did I want to fucking look at? It wasn't Bobby. Amazon's breaking 130. Something important I needed to do. Now I can't remember what the fuck it was. Fubo's gonna try to maybe retest $4. Still holds the record at Grand Canyon University for longest keg stand at 4 minutes and 20 seconds. Think there's a good chance we could see a meme rally similar to Jan 2021 by end of year. No? Why? Not unless we have a market crash and a recovery between now and then. Listening to one side of my brother's conversation with a financial guy about his GME position, hilarious. That sounds pretty fucking funny. What about QQQ calls? I mean, I guess you could if you want. How's QQQ performing today relative to the SPY? A little better. I'd be careful at this level, though. I'd be careful on going long at both of them at this level. Although, I gotta say, it looks kind of strong. It's very chasey. There's not been a lot of pullbacks yet. And still quite a way off from 405. Do I buy puts on the Queen Elizabeth, or is everything priced in? It's been priced in for 10 years. Yeah, cat's doing good. It's already back to 81.50. Despite Jimmy being up, my CCs are up 40% due to crash. Thanks, Girk, in about 20 hours. Congratulations, man. What if the Queen reveals that she was the one shorting Jimmy the whole time on her deathbed? That's pretty unlikely. Fidelity denied me options, and I have a 180-day waiting period. Fun times. Here's a secret that I'm just going to let you in on. First of all, you're not supposed to tell the truth on the fucking options disclaimer. Nobody does. According to Fidelity, everyone in this chat has 10 years of options trading experience and is a multimillionaire. Second of all, you're not married to your fucking brokerages. You can just open a different one. You can open hundreds in a day. It's the easiest thing in the fucking world. Did you hack my Fidelity account? Excuse me, I have 20 years and 1.2 billion. The Fidelity thinks I have more money than the German GDP. You might now, actually. Have you ever had a bad poo and didn't have wet wipes? I'm here to share with you about the Alabama wet wipe. Just neatly fold 8 to 10 squares of double ply, 16 to 20 of single, and just spit on it. Bam, clean whistle. Okay. That's just wet toilet paper. This is why you buy a bidet. Toilet paper is only for drying your butt, not smearing your poop around like an endless brown crayon. Does watching your stream count as options trading experience? No. In a market like this, how liquid are you from day to day, percentage wise? Oh, fuck. I have everything except my like long term positions off the table right now. I mean, like I have some plays and stuff out, but probably about 30% cash currently, which is for me a lot. Usually I try to have as much money in the market at any time as possible. Glad I'm eating breakfast during that. Yeah, Kendra's really firing up early today. 100% watching is like starter options experience. I was speaking to a man who recently moved here from India. He said they don't use toilet paper there, but instead cup water in their hand. Wet hand, same like toilet paper? Sure. Kind of like a manual bidet. The Romans used like a wet brush and they just shared it with each other. They just had like a brush and a bucket. Everyone used the brush. Cholera was a big problem. Fubo Fabio. Interesting. Well, apparently it's getting called Fuberto. 50% of the votes for Fuberto. What SPX 0 DTE puts? Oh, I don't know. I played some 0 DTE calls earlier. Those were fucking nice. Fubio, like Fabio. Ooh, Fubio's pretty good. Huberto Rocher. Cat still looking strong. Are you gonna ask me every 5 fucking seconds? That looks fine. There's a gap to fill to the upside. Should probably define strong though. Chances we can watch Tesla? Sure. Tesla's doing okay. Jimmy gonna bounce or nah? I don't know, it kind of looks like shit, right? It fell back below the flip point. Why is Jimmy getting wrecked? I mean, it's up on the day. I don't think it's getting wrecked. It's still up 6%. It's... Why would it be going up? Hold on. Maybe you have a really clear reason as to why the price would improve today. That's a better question. Why would GME go up? Because Pulte bought more. Tesla's either dead or not dead. Not dead today. Although pre-split still trading sub 900. Jimmy up on good earnings? Nope. Negative EPS. Not good earnings. Bad earnings. They beat estimates so good. Did they? I thought they just met estimates. The only big change was that SG&A was down, which is good. EPS beat. Okay. But it's negative EPS. I thought it was negative 35. Or at least like the analyst report I read before earnings was negative 35 cents, which seemed to be more accurate. Negative 35 adjusted. Fubo about to bounce. Probably just move up with the market. I think, yeah, if we get some volume on like a move up in the market again, then Fubo will probably move up too. Is the partnership not good news? I mean, nothing was really fleshed out, right? So it's not bad news, but it's not anything. And without any like forward guidance as to what that partnership entails, it doesn't really mean anything, right? As far as like, I mean, you have to look at this stuff like cynically from the mindset of like an institutional investor. Because if you expect the price of the stock to go up, you're expecting institutions to buy in. And there was nothing in the earnings call yesterday that would prompt an institution to purchase GameStop. Maybe some accumulation at lower prices over, you know, the next couple months as it gets closer to, you know, possibly positive earnings. I would say that there's two really big reasons that institutions are not all about buying GameStop right now. And it's really not the earnings. Like the reduction in SG&A and improvement in EPS would attract some institutions. Especially ones that wanted to get in before GameStop started reporting positive earnings. The big two reasons that institutions will probably want to stay out are the cash burn. Institutions don't want to buy in before a dilution, right? And you know, year to date, the current rate of cash burn is like 200 million a quarter, which gives them like 4.5 quarters burn rate. And then, now don't get me wrong, they can pull that back more. But then the other big reason is because of DRS. DRS creates volatility. Institutions don't like to buy volatile stocks unless they get them for very, very cheap. With this dwindling upside volume on SPY, should we be anticipating a hard rejection on 401? Possibly. Yeah, we're starting to lose some steam. It's a very 401's very critical. We either break up from it, and that could push us up as high as like 410 over the next few days, or we fail the test and possibly move back down into like the 39, like 390 range, maybe 395. He didn't have to give forward guidance when he was at Chewy. It was a private company. I'm sure he did because they had private investors that they had to answer to. Probably private investors that were very, very aware of day-to-day operations. thoughts on Upstart? I know it's on the threshold list. I've been watching it. It does have quite a lot of SI. The company doesn't really do anything. They're not super great at making money. $126 million last quarter, and they're working on reducing SG&A even more, going into the quarters that have good sales. I know. But institutions will wait till they reduce that further in those quarters. I don't like Phase very much. I don't know much about APN. Oh, Apron. Apron could be interesting. I need to do like I need to dig a little deeper into it. It seems kind of like they have a share off buyback on the table, but I don't know when they intend to buy back. They just up the amount on the buyback, but when are they doing it? Like that's the question. That's what I care about. Is when are they buying back shares? Like liquidity in the stock seems fine after the recent rallies. Rev looking very similar to 722 on the daily. Little downturn, then more spikes. We'll see. Man, no date on the buyback yet. That's what I'm waiting for, primarily. It'd be nice if it was generating some more FTDs. Yesterday's 10Q has no more reference to investor risk of a short squeeze. Good. If Fubo had a partnership with the NFL, then maybe it would be worth the subscription price. Yeah. They do have like broadcasting rights for NFL games through Fox and NBC and stuff. Through their other partnerships. But they don't have like an NFL package. If you had to make a guess, how likely do you think it is that Rev gets delisted? I think if it maintains its current prices, then pretty unlikely. And volume. It's not only is it trading sufficient volume to remain listed, it's trading at a price high enough that, you know, it shouldn't be delisted. But it's a private hearing, right? Like there's no guarantees. I think Revlon's pretty confident that they're going to remain listed. What do you think RC will do with his Bobby gains? Just in the pocket? I mean, most rich people right now are just holding cash. If NFL's exclusive contract with DirecTV ends after this year, if Fubo got that, then boom. Yeah. There's you do know that there's more people watching like soccer internationally than there are people watching the NFL in the US, right? Fubo has NFL Red Zone for $5 a month. What else do you need? Jeez. If I get the $250,000 membership, will you eat pineapple pizza in a hotel in New Jersey with me while day trading AMC and Ape? No, you've pushed it too far. Spy, bullish consolidation pennant? No, ascending wedge on lowering volume. Kind of bearish, honestly. But this was my upside price target for today anyway. We'll have to see. Probably not going to break out in the mid-afternoon. Like, from now through 1 o'clock. Maybe a fall back to like 39.99. Chop. Volume's kind of drying up everywhere, so. Rich Dad Poor Dad called a total collapse 11 months ago. Good thing people take that huckster seriously. Do they? Possibly time to re-up on puts. It might not be a bad entry for like longer term puts. So right now, my SPX position is kind of like a. I mean, it's a guts strangle, but it's or yeah, long strangle, or well, I guess straddle. So I have 415p and 3890C. And that's kind of where I'm at. These are for 1021 and these are for 916. So my goal is to sell these off, use the profits to buy another out of the money strike wherever the SPY rallies to. Say we move up to like 405, I'll probably get like 4,000s. It's a string dingler. You know, a lot of this is something that I noticed at a pretty young age, but a lot of like really big investors, people who you'd think would be very averse to this thought process, are like constantly bearish on the economy. like I don't know how much money these guys lose betting against the market, but it's got to be a lot. It's like they've gotten so bored with everything. All they care about is market crashes. And they're just not very common, right? Like the only one who I don't really think falls into that trap is Buffett or like Munger, like because they're just like, fuck it, you know, I'm just gonna, when it crashes, I'll buy shit. And then they just keep buying shit, right? They're like, oh, that's cheap, and they buy it. But all the other ones like Alsman, Burry, Peter Lynch, like they're all like, oh, it's all gonna die and burn up. This is unsustainable. And they'll say that for like 10 years. They don't care. They're indifferent to poor people. They don't hate them. I don't think actively. It's not like, I'm going to go fuck over some poor people today. Right? It's just in absolute indifference. Is EPAM still looking okay for October put entries? If you can get them. I would wait for QQQ to finish its like rally, but yeah, if you can get puts. It's still really like 420, 410, and 400. No, Burry is constantly predicting the same crash. Burry's problem is he's autistic as fuck, and he thinks that the market should react to the conditions that he sees in the market immediately. Right? And so he's also kind of crazy, right? He's rarely wrong. I know people like to make fun of him, and like I was talking to someone about this last night, that sent me like a video about him. Burry is a fucking genius. Do not mistake that. He consistently beats the market by a lot, like 30 to 150% a year, every fucking year, regardless of how crazy his plays seem. He's almost never wrong. His problem is his timing, because he really, like, I don't know, it's probably like the Asperger's, but he sees economic conditions and he expects the markets to be efficient and the markets to realize the effect of those conditions immediately. And that's not how it works at all. On crashes, did you see Trade Spotting's vid on the SPY? Every time for the past 50 years we've retraced 50%. Oh, I don't know if I care about crash technical analysis. Which we now have with the 430 test. We then go on to all-time highs. Thoughts? We have retraced 50% from the high, which we now have with the 430 test. We then go on to all-time highs. Thoughts? That's not true. There was a bear rally in 08 that retraced really, really fucking hard. Hold on. So this is 08, right? Like end of 08 into 09, which was like the 08 market crash. This rally was fucking insane and like weeks long. It went from March of 08 all the way through like end of May. And it retraced more than 50% of the drop at its peak. And then we had a smaller rally following it before we crashed. That went on for like 5 weeks. COVID was a little bit of a different story. You know, the COVID crash went pretty much straight down. Week over week, it went straight down. Volmageddon, which is right here, retraced 50% of the drop. I don't know if I'd really call this a crash, but back in 2016, we retraced almost 100% of the drop. It was like 86% before falling off. So, yeah, I don't agree with that at all. Also, every market crash is different, so I wouldn't try to use TA to predict one. How do you control your impulses with timing? I swear I'm always too early or too late. Train them so that your impulses are correct. One of his plays is IBA that outperformed the market because the information about it was obscure. Yeah, I know which, the chicken company. He was wrong when he sold Jimmy in December of 2019. I don't think he was. First of all, you remember he had a cost basis of like nothing, right? He'd already experienced his MOASS. Second of all, I think he got out to avoid legal ramifications. He was more aware of anybody that there was potential for a squeeze. Remember when they couldn't find his shares? I've read a lot of Burry's like old DDs and they're phenomenal. You don't need to be a fucking quant to find good stocks to buy. He is, don't get me wrong, but you don't need to be one. You need to be able to fundamentally assess businesses very well. Think of your job, think of the job of an investor as like being an assessor, right? You were trying to find things that cost less than they're worth. It's not that hard, right? But if you can't evaluate, and that's why I have everyone read, you know, Graham's book, books, because ultimately, before you can trade effectively, you need to understand how to evaluate a company. And, you know, it's one of the reasons you don't see me buying in on shit like APRN or, oh, what was that shitty one like a couple months ago? Not ACIW. Ader, BBIG, all of those. BBBY, yeah. I'm out of BBBY because I think the potential for BBBY to be a better company is gone. SST was never a good company, and I never bought any DWAC. Options is a strategic investment is Macmillan. Yeah. Palantir's not actually a bad company. They just don't make money. Right? They're very slow to make money. They have a lot of like long-term debt they need to pay off. It's an extremely long turnaround. And their growth is cumulative. So as they get more and more of these tiny contracts, they make slightly more money every quarter, but it's very, very slow. The reading list is on the subreddit, I think, in the wiki. It's pretty short. I kept it easy. It's technical analysis of the financial markets, intelligent investor, securities analysis, and options as a strategic investment. There's more. You could expand on that with like macroeconomic theory and stuff, but for most people, that's more than enough. Reading list pinned in general Discord as well. Oh, okay. Thanks, Atomic. I didn't know that. Yeah, there you go. So general chat on the Discord on the pins. Who are your favorite macroeconomic theorists? I really like Fisher Black's book, Exploring General Equilibrium. Ray Dalio has a couple interesting papers. You can pick up like Paul Krugman's macroeconomics book. It's a lot, but it's worth it. Palantir, Tesla, Nvidia suffer from the syndrome of being good companies. Ones are likely to beat inflation with good cash flow, with valuations way too high. I wouldn't say Palantir's valuation is way too high, but its current valuation is safer. Like, it's not going to lose a lot of value. As a Palantir bag holder, it's near its bottoms. I guess I'm not a bag holder anymore. It still feels like it though. Palantir still has like 70% IV. I mean, cover calls on it are great. The stock sucks, but the cover calls are really good. That's why I still own it. Jesus Christ. I'm sorry to hear that, Jesus. Tao of Trading by Simon Lee. No, but most books about trading are horseshit. They're either like just props for traders' massive egos, like I'm such a great trader, I'm gonna write a book about it, or they're full of bullshit information that you could find anywhere for free. Any advice on how to get out of my cash secured BBBY $12 Jan 2023 puts? I was waiting on an OPEX run or FTDs to close them out, but damn, I don't want to be bag holding this. Your best bet might be like on a rally. If you know, it'll be hard for Bobby to cross 12. If you hit a rally like in OPEX during OPEX or something, while call interest is still really high, which it is right now, and then that upside hedge gets moving, then you'll be able to just get out of them. You'll be able to close them. If not, you might wait for a smaller rally, like if it doesn't cross 12, and just get puts, like downside puts, to at least offset the cost, right? That way, if the price falls, you can, wait till you get exercised and then exercise the puts. Kind of the same way that you like can hedge a losing covered call with like a really shitty credit spread. So like say you sell CCs on GME at 25, right? And GME is trading at 23. And it starts moving up, right? Hits 24. You can buy $26 calls with your credit. And then if the price keeps moving up, say it hits 30, when these are assigned, you can exercise these for like a minimal loss. Like you only change your cost basis by like $1, right? It's terrible. It's definitely not the best situation, but it's a way out if you can't buy back. I'm giving out fills for EPAM 420s like Oprah. At the mid? Maybe I need to adjust my price. I haven't gotten a fill at all. I've put a bit more money than I'd like into Rev, and would like to have a bit more cash for OPEX. Better to take the small loss in Rev, or just wait it out and have less for OPEX? I mean, why did you buy Revlon? Did you buy Revlon because you thought it was going to squeeze the next day, or did you buy Revlon because you had a thesis that over time the price would improve? You bought shares, so, that's kind of indicative that you were going to give the position time, and now you're trying to pull your money out of that position and move it somewhere else equally speculative. Does that make sense? Does that sound like the actions of a well-planned investment? Or a diligent investor? No, OPEX is still very speculative. All of these are big gambles. These are not like... None of these would be considered safe plays. Like Rev is a huge gamble. GME OPEX is a huge gamble. Fubo a little less, but that's just because of its price and potential. Kevin told me how to tag people and get a highlighted box. I thought just at and their name, but that doesn't work. That's exactly how it works. You just have to make sure you spell their name correctly. Like capitals and everything. Ader is looking pretty good. May buy down here. Ugh. Gross. You're kind of like the financial YouTuber equivalent of the Alec Baldwin speech in Glengarry Glen Ross. Where the fuck is Dettles? He would love to hear that. If you look on Reddit somewhere, there is a video already of that. Coffees for closers. You ever watch that video with Seal that T Dettles made for you still? I do. Just look on Dettles' posts. It's in there. When you used to J trade, what kind of things did you consider before trading? Just TA? No. I picked stocks and then, you know, did analysis on them and then traded them. I've never really been one for like scanning the market. Right? It's much better to have intimate knowledge of the things you're trading than it is to, you know, just randomly trade bullshit every day because it's spiking. Unless you're just scalping stuff, in which case it's, I mean, that's just what you do when you're scalping. Is there a quick way to calculate the risk-free rate? Hmm. I mean, you have row. I think you just use like the annualized treasury rate. Like, I don't think you need to calculate it. Are you trying to talk? Are you talking about like how to calculate row over time? It's kind of, why would you give a shit? That's if you're selling options. Snap about to snap back up. I mean, if the SPX continues to push up, probably. Or NASDAQ. Just use row. Just like turn row on. Right here. Like, I don't think it's gonna matter to your strategy. I think it's like 3% right now, right? 3.25. 3.27 as of this morning. If that is that what you're looking for? Just the value? Jimmy calls, yeah. So even if price doesn't dip, ideas to wait another few days before entering September OPEX options. Yeah, I mean, I'm gonna wait. I always do. Is this gonna be the part of OPEX where like everyone asks me every day if I'm buying options that day? I just want the risk-free rate to use in the Black-Scholes calculator so I can figure out why my EPAM was filled. Oh, okay. 3.275 or 3.27. Let's go Bills. Nice. Okay, so here's the deal. For the next week, if you ask me what strike or what options to buy or what you should do with X amount of capital or when am I buying options, I'm going to ignore your question. I am still bullish on Rev. Sweet, you do that for me anyway. You're welcome. I haven't been ignoring you for weeks, Mr. Diggs. What options do I buy and when? Are you still bullish on stock? Does buy puts cost same like shares? Would you max out 401k loans in this market? They charge a 4.25% rate, but that money goes back into the account rather than the administrator's pocket. Viable? Hmm. I'm not super versed on 401ks. Retirement plans aren't really my thing, but loan, like, it's just leverage, right? I wouldn't do it now, but the rates are moving up, I assume. Carbon based. Hold on. You got censored. Said naughty words. So what options are crap that I should not buy? JK, seriously though, are you still bullish on Rev? Why did it why did it remove crap? What the fuck? You got censored for using the word crap. Take that. Not asking when, but what IV are you looking for? My broker doesn't show IV or delta. Most accurate public source to track these. Can you just turn them on? What fucking brokerage doesn't show IV or delta on calls? Even fucking Robinhood has that information. Of $1, what's the best ice cream sandwich that money can buy? Hershey's. If you take out a loan on 401k, you can't contribute until the loan is paid back. TLDR, don't do it ever. I mean, there could still be opportunities to do it. It's just the timing of them would be very difficult. What's a good entry for BTU? Sub $20, ideally. Although this is the first time it's fallen, I think, under 23 in a while. Let me look. I just have buy orders set at 18, but they haven't been filling. Yeah, 1864, awesome. $20, really good. 23, okay. $25 leaps are dope, which I currently have. That's those are my BTU targets. I closed some EPAM puts last week at a nice profit. Are you thinking about hopping back into EPAM puts now that it's 425? Yeah, I'm gonna probably revisit EPAM and Amazon to the short side after this is over. I think both of them still have. Well, Amazon filled its downside gap, but will likely. I don't know. Amazon, you could probably just go like long short on and make money, but especially into Q3 and Q4. I would say, yeah, I'll probably go short. I mean, I have buy orders for EPAM puts again. They just haven't filled. I think the price might need to go up a little more for them too. You think we're still on F-Man, or did the split change it? I don't really know how like tight the rules of us running on F-Man are. I think they can run us anytime between F-Man and the quarterly expiration, as long as they clear out the obligations at some point. I've been buying $25 2024, but I've been buying them under $20. New Scale? I've heard of them. I don't really know that much about them. What's their exposure? Most of my uranium position is in Sprott at like $34. Ew. Well, here comes that move back to 395. Should probably mark that, right? See how it does here. 39,750. Hmm. 398, huh? Okay. Took profits on stops from AMD 916s. Nice, man. Ooh. This is an aggressive sell-off. I think I stopped out of my calls. Yeah. Stopped out of my fucking... Did I not set stops on these? I am. Spy haul incoming? Not even close. Although this is some of the best liquidity I've seen in a while. Big tech sell-off. Tesla? Tesla got fucking hammered too. Interesting. Huh. This is fun. Rev buy opportunity? Cheap. Quick put up Guybrush. Sorry guys, I failed my margin call. Why is the biggest volume candle of every day the last minute of the trading day? Oh, that's like the settlement, like the end of day settlement. Why isn't Jimmy dropping? I thought they didn't have any large FTDs today. We have FTDs. Probably offloading the internalization from yesterday. Utilization went up at the end of the day yesterday, back up into like the 60 range. If the market keeps dropping, eventually GME will too, but not right now. If this continues though, if we go back to like 3900 by end of day, GME utilization is going to drop really hard. Looks like we're going down another leg. Yeah, it's 3900. Somebody who's been shorting the fuck out of UVXY is going to be in trouble here in a minute. What are the odds Jimmy Moasses on the day Return to Monkey Island is released? What day is that? $39.50 is the last relevant support in this range. 39.60, 39.50, like this range right here. So from like this to there, I'll mark it. These rallies are really weak though. Apple did go down hard. I'm glad I remembered to set a stop on my SPX because I forgot to set it on Apple. But now I need to re-hedge the upside at some point. It's just a question of when. Jpow spoke this morning. He didn't really say anything. Or at least nothing he didn't say at Jackson Hole. Hmm. SPY is only 0.38 down. Yeah, I know. I don't think we're gonna crash, but VIX is spiking, and the downside move has got some serious volume, so it can keep moving down. Apple sell-off is strange. Well, it's got a lot of volume. This sell-off is like way bigger than RC's stake in Apple. Jpow saw his shadow. VIX just broke 25. Ooh. Oxy? 62 to like 54, 56. 62 to 56 is a really good range. Yeah, I don't know if there's any news. RC still have Apple? I think so. Did you check his holdings? Solve big enough to lend any credence to the ISDA Phase 6 requirements? No. Dude, they fucking announced that shit like over a year and a half ago. Everyone's already positioned for it. They're probably operating under the assumption that it's already effective for months now. Didn't you used to work at a bank? Or like a fund? Like, why do you believe all this bullshit? There are a few better feelings than being profitable on both sides of a straddle. It's nice. It's nice when markets are volatile. Are you talking to yourself now, Bipolar Bear? He works at Gringotts Wizarding Bank. Yeah, that was yesterday. Bank of Canada did the 0.75 hike yesterday. No one cares about Canada's fucking forward rate. I don't know what to think sometimes. So many rules from different entities. Hard for me to understand what's important and what's not. Yeah, but like you must have some understanding of like how compliance works. Euro did a 75 BP hike this morning. Okay. Rev 35C down to 105. That's the most bullish thing I've heard all day. It's actually at 103 right now. IV's not dropping, the price did. SPY about to leg down again. It looks like it, yeah. It's very bearish. That's not how compliance works at all. Cobra. They know well in advance and spend most of their time planning for rules changes that are going to occur in the future. Are you bullish on biotech at all? Not really. People are just looking for somewhere to throw money that seems more reliable. I'm bullish on shorting the fuck out of biotech fucking speculative run-ups off of clinical trials. And he gaps on FSLR after yesterday's run after hours. I don't know, probably. Take a look. As someone who deals with compliance, the sheer mention of new SEC and FINRA regs caused the company I work for to create new standards and a new team a year before they were put into effect. Yeah, that sounds about right. Oh, here we go. VIX is bumping up again. This is fun. Like this. VIX gonna hit 26. I have so many fucking VIX calls. Did you see my DM from earlier? Is that TA accurate? I didn't. Yeah, it very well could be. I mean, it's not really like the head and shoulders part's already over. Right? This is just you're looking at like short-term distribution. But you see how you have like the better signals to look for there would be like the bearish divergence on RSI and like the larger divergence in MACD. Yeah, because once you start getting like multiple shoulders, like so you have like that head and shoulders at the top, right? But you're looking at this as like another shoulder, like in the future, right? And the problem with doing that is, you know, these can stabilize in that range. This is the head and shoulders, 3 peaks, right? But once you start trying to like go out into this range, you know, these can stabilize in a higher range and break up. So the reliability of, you know, this next move is diminished compared to the previous one. Because yeah, you found multiple levels of buy support through that range. Loaded up on some SPY hedge action on that 401 test. Yee. Nice. Rev is the honey badger of the market. It doesn't give a fuck. The collective sigh of people who bought back CSPs. Why? Why were people so afraid of their like sold options this morning? Like CSPs, if you don't want to buy, sure, but like so many people were like buying back. They're like, I'm gonna buy covered calls back at open. For what reason? Profits. But like, no. People were buying them back because they thought GameStop was gonna fucking rip. Because they sold them $2 out of the money. That's just dumb. Although looking more intelligent minute by minute. I'm still holding my GME $25 CC 916. Ask me anything. GME way more likely to close at 23 than 26. Yes, it is. It's more likely to close at 24 than 26. 23 is a little low. It's just a bear trap on Apple? I don't think so. This looks pretty fucking bearish. On both. I mean, these are like bear pennants forming. We'll probably get some like upward price movement. It may not even go on that long. Buying calls for Pickles picks. What are your thoughts on just getting 0.7 delta 40 to 60 day options opposed to actually trying to nail the in the money price target exactly? You're spending a lot of money on theta and delta. If the position moves against you, you'll lose more money than you would on out of the money calls, and you'll lose that money much faster. So your risk is tighter, and you get way less leverage. It's up to you. I mean, I mean, obviously my confidence in my own picks is very high, so I'm not really concerned with that. Did any of the Pickles picks not hit this week? I think they all did. Yeah, AR didn't. I think I think it did briefly, right? But I wasn't in it anyway. I think briefly it hit like the mid target, or no? It's actually doing well right now. Inversing the market trend. Huh. I might buy it now. It's having a pretty fucking good day so far. It's up 2%. Yeah, yesterday was real. The overnight period into yesterday was really bad. Although I think if you have 9/16s, you're still fine. It's doing really well today. I just picked up some calls. $40. SPY still look bearish. Yeah. This will remain pretty bearish until it retests. Yeah. I mean, really, it would need to move back up to above 39.78. Good entry for Apple calls, though. It is going to recover. Hmm. The fuck? That was weird as shit. Any thoughts on docu earnings other than, yeah, I'm not playing it. I'm not playing it. Bearishly quiet in here for a minute. Can at least hum so I know my speaker works. No, sorry. There's an eerily low number of people in here not asking about DRS numbers. Or we finally filtered those people out after all these months. Maybe started to. They're still here. They just hate watch and don't comment a lot. They're like, yeah, nobody knows what's going to happen. I too hate making money off my assets. Nice. Should DRS numbers help keep the cycle going? I mean, DRS increases volatility, and volatility sellers like that. So, yeah, it helps the cycles. It doesn't create MOASS, but it helps cycles. Can you tell Superstock to stop hate messaging me about the DRS numbers? Thanks. Just JFresh. Just reply with pictures of your butthole. Think we should be looking to re-enter Cat, or is the play dead? No stops? I mean, Cat barely moved on the drop. That actually sounds like it would work. Should I paint it purple first? Do you need to paint it? Given given the DRS numbers, Is the illiquidity you're seeing in the spread? Are you seeing the illiquidity you'd expect reflected in the spread? I mean, liquidity in Jamie's like bid-ask spread has been better since the split. Right now, like 2 to 4 cents, which is, you know, 8 to 12 previously. Got an offer for a new job, which will increase my salary over 200% since the inception of Pickle Financial. Wait, hold on. There's more. I can't wait to lose it all on weeklies. All of my Dans can take the rest of the week off. But first, for your elder Dan. Congratulations, Dan Almighty. That's fucking awesome, man. You're finally gonna be able to give your Philadelphia wife the life she deserves. Revlon doing a weird. What kind of weird? Like good weird, bad weird? Just chopping at 650. You know what I love? I have in the money CSPs right now that are up fucking 77%. We're having meat logs for dinner. Ah, the high life. Do you guys ever go on shift search and laugh at people? I do that a lot. Nerve slowly headed to $10. I know. That's what it's supposed to do. It's supposed to go back to normal. Ooh, the SPY is recovering. Oh. What the fuck? Goddamn piece of shit. I don't do that with shit search, but I also found out that the internet has porn. Huh, where? What is a Dan and what's a good entry point into one? Usually at Wendy's. And they'll explain. Well, you'll figure it out really quick. How long can buy orders be internalized before they dump to the tape? I mean, not very long. I opted out of JFresh art in my inbox, and yet he persists. It's very important to him that you recognize and appreciate the quote-unquote art that he sends you. Roaring Kitty. How long can buy orders be internalized before they must be printed, dumped to tape? Yeah, so it's a constant cycle, right? And really what you see is like a glut of when you see you know rising utilization, you're just seeing a glut of orders on one side of the tape, right? So, you know, if buy orders are heavy, you're going to see internalization rising with minimal effect on price, but it's a constant cycle, right? Like they're constantly rotating out the previous order flow and into the new order flow. So it's not like order X is being resolved with order Y in like 3 months, right? It's more like order X, like say these are buys. Buys come in, then 2 sells, and then 1 buy is carried over, and then you get some more buys, and then you get like 3 sells, and you still have that 1 carrying over, right? And then eventually, but like that carryover is resolved here. Does that make sense? So I don't know if that's the best way to explain it. So like buy order 1 is then resolved with like sell order 3. And so it's constantly rotating them. But it's not like buy order 1 is existing in perpetuity. I watched a YouTube video last night and discovered I'm quiet quitting, basically slacking off until my employer realizes it. You and everyone else in here. I still don't entirely trust the upside of this move, but I'll probably re-enter calls here in a minute. I'm gonna wait for like a little bit of a pullback, maybe back down to the 60, and then I'll get back into calls. My calls got stopped out like right away on the first drop, and so I currently have no upside hedge. I already sold CCs on GME for next week. They're up like 50%. I'll probably buy them back before then. You don't see it going down. I think it'll pull back and move up more. We'll see. I mean, obviously I'll wait for it to find support on a pullback. I have puts already. I don't need to buy more puts. I have puts. I'll try to explain that again. So I have 4150 puts on SPX. I had 3890 calls, but those got stopped out up here. So now I have no calls. I need to re-enter calls. I don't really love the range to the upside here. It's like a 20-point range. But I want some kind of hedge in case it breaks up to like 40, 50. So yeah, I'll probably DCA into some calls here. GME 20p 916 CSPs 40% year over year. Nice. The selling CCs on a cheap stop like Fubo more or less beneficial than more expensive stocks. Well, you're gonna have more leverage, right? So you reduced premium. So to match the IV is high, right? But to match the leverage, you would need to obviously sell far more. But Fubo's like okay right now. It's a little low. Let's see. Fubo 90 DTE is like 21%. That's actually not bad. Shit, even like October is 16% return on capital. For covered calls. Well, you can discount your entry by holy shit. And Terra Resources is up like $1 since I bought my calls. What the fuck? It's really like moving today. About to cross risk? Yeah. Okay, I need to buy SPX calls. $350 delta. We'll put spreads on Jimmy paying 20% until next week. Yeah, Jamie Ivy crushed really hard on like weeklies and bi-weeklies. Holy fuck. Actually. Ooh. Man, October's like just out of the money or such a fucking good deal. Interesting. Full put spreads on the SPY are paying like 27.5%. Like, well, for the 23rd, like, sell a 394, buy a 389. Not bad. Actually, I fucking love this one. Sell 364, buy 362. Huh. That's a 18 cent a contract. Credit. That's kind of fucking nice. Actually, sell 364, buy 360. Look at that one, Corneb. For October 7th. Are you playing cover calls on Rev? No, I probably should be. I was waiting to see what happened today. I don't need to look at that anymore. Let's see what Caterpillar is doing. Okay, Caterpillar's having a very nice rebound here. That's off VBOP. Yeah, Cat looks good. Need tips on how to reduce theta with confidence. I don't know what you mean. Are you just buying too much theta? Experience? I don't know. Your style is much different than mine. Today was T+2, vol ratio 26%. Ratio of 26%. Today was T+2 from August, T+2 plus 35 from August 20, or August 2nd, right? No, hold on. Let me check. Today is T+2 plus 35 from... Nope, that was right. August 2nd. What was wasn't the fill volume on August 2nd was like non-existent, right? Where's Carl's fucking chart? August 2nd. I don't know why. Carl, why is August 2nd not on your chart? Is it 21% fail to volume ratio? I can't tell if you've labeled August 1st twice and done the same with the 25th. Oh, because the holiday adjustment? No. I thought, if I remember correctly, the fail to volume ratio for those days is really low. Storm Muy Bueno, thank you so much. I appreciate it, man. Hit me up on the Discord and I'll get you added to the country club after the stream. But August 2nd wasn't a holiday. Oh, because the failures, no. Yeah, August 2nd wasn't a holiday. It was 48 million volume. I don't even see it listed. He just has August 1st twice. What's the earliest expiry that we're targeting for OPEX? I just buy the next month's contracts. So August 21st. Why would you buy 28s? Those are weeklies. 28s are a weekly contract. You're not gonna have any OI on that chain. How do Apple calls look at the money? Okay. Spies up. Jamie had good earnings and the price still goes down. What? The market's not up today. Spies up, but the fucking SPX is down, right? Or it's up like 1 basis point. Now it's not. Now it's just at break even. It's like barely up. And GME ran a little bit this morning. It had like a nice little bump. I don't know if it's pinned to the Rev channel. I guess. There's just no range for GME to move to the upside right now. There's no calls. There's like no bull side supporting an upward move. GME is not fucking going anywhere without calls, right? People are bullish and they're buying calls. GameStop can go up, but without calls to the upside, it's not fucking going anywhere. I don't care what the earnings were. And it didn't have good earnings. It had shit earnings that were slightly better than their last really awful earnings. I'm winning because it looks like a bunch of GME bulls bought my calls. No, the net sales being down isn't a really bad sign. A lot of that has to do with the economic conditions, right? Economy is shrinking. I'd like to say I bought your covered calls, but we both know those have too much theta. But they are far enough out of the money. I don't know. I feel like this is what like compounds that belief that like calls are bad or options are bad, is like people get really bullish on stupid shit like this. You know, market open, they buy $30 calls. Jimmy runs to 26, their calls print, and then they bag hold them to expiration. And then they're like, calls are the worst. You can only lose money on them. Why do you languish so much with the pores? They aren't nearly as good as us pigeon whales, and they smell really bad. In fact, the stench is hurting my nostrils. I'm out. I'll see you later. Later, BMG. Have a good day, man. Reddit users calling for a Black Swan event today. I think they're right. Nah. Stop talking about my investment strategy. I bought out of the money calls for October. Am I winning? I mean, no, you're down 20% because IV crushed, right? You think we could hit 34, 36 for September OPEX? That'd be cool. I bought 10 916 SPX 399 39.95 puts at a Tesla 401. I closed them out for 10K profit when I got back from mowing. I'm an expensive lawn boy. Congratulations, Ben. When do you think is a good time to stock up on GME shares for the long term? When they're cheap? They're sort of cheap right now. They could be much cheaper. If the market tanks hard the remainder of September, safe to say it's a NOPEX this month. I don't really think the market tanking has a lot to do with it being, with there being a NOPEX. Like, sure, there can be some downside pressure, but that's not going to create like a NOPEX type scenario. A NOPEX just happens when there's either not a lot of obligations, or alternatively, there are no obligations. Actually, a downturn in the market through this period, a rise into SLD, and then another drop before the expiration on the 16th is bullish for the market going into the week of OPEX, because put positions will take profits, right? And when that's realized in T+2 the following week, the market rallies, generally speaking. So if the market were to drop from today all the way through SLD, that would ultimately be bullish for OPEX. Short of a crash would be bad. Do you think Fubo is the best stock out of the ones we are watching to create the most long-term wealth out of it, focusing on shares and selling covered calls? Love you, Gurk. Thanks. Fubo below 4's solid. Caterpillar below 150. Or, well, 160. Caterpillar below 160. GME below 20. Well, actually, GME below 20, let's say 24. And, yeah, those are pretty good. You know, Rivian has a fucking hell of an investor base, man. That stock makes no fucking sense. Big institutional interest, if nothing else. They got to prop up a competitor to Tesla. That might be it. Palantir is actually not bad to sell covered calls on. It retains fairly high volatility. I wouldn't buy it at this price, but I was also planning on Katsu. Tired of losing money on hopium emotion-based calls. Gonna change strategies. Thanks, man. All the best. Cool, dude. It's good to have a mix of both. Believe me. I haven't had like a negative month in a long time. I don't think since like April of last year. But it really helps to have some long-term positions that you like sell covered calls on. Especially if, you know, your income is derived from trading and if you don't have a lot of money, it really helps to fall back on those covered calls. Like that steady, stable income from stocks that you just are okay with owning. It takes a while to build it up, but it's a lot faster than trying to build up like a dividend portfolio that pays an equivalent amount. Like if you think about it, most dividends fall between like the higher dividends fall between like the 3 and 4% a year yield. And covered calls can net like 2% a week. Do you use that strategy to make sure that you make X a month to cover your minimum living costs? I mean, I have dividends. Like I have enough money that I have dividends that cover most of my living costs. But I use that. I just reinvest my capital like from covered calls. But yeah, I mean, if I had to rely on it, I would. Have you ever opened a buy right using a deep in the money call? Sometimes the arbitrage is advantageous. A lot of them, yeah, I saw monthlies on. Monthlies are like 45 DTE because I don't want to manage them every day. It's more volatile stocks like Tesla, 14 DTE, GME, like 7 to 14 DTE. Does streaming feel vapid sometimes? No, I don't think so. I feel like, I mean, it's not like I'm just like streaming myself being an asshole all day. Well, I am, but I'm also teaching people stuff, so I don't know, it feels like I couldn't be like a different kind of streamer. Like when I've streamed video games, that feels vapid. I'm like, why the fuck am I doing this? So people can watch me play. Like, it doesn't make sense to me. This makes sense. We're poor with low money to invest with. I plan on selling CCs with the positions that I have, and then taking that money to play semi-risky options like OPEX. Is this an okay strategy? It's a strategy. But remember that like a reinvestment plan until you have some sort of middle of the line income is probably better for you long term than trying to strike it rich on options plays. Like reinvesting that capital until you have like a decent amount of income every month from it is probably better, because you're just going to take on like high risk positions and not hedge them properly, and you'll lose more often than you win, at least initially. So if you're still learning, it's much better to just keep compounding whatever money you're able to make off covered calls. We're watching you stream video games though. The market's a video game. Yeah, but it's better than that. CCs are great, but I make a good living by having my employer send me ergo equipment I don't need and selling it on Craigslist for 100% profit. Mac, welcome to Dillionaire, man. Thank you so much. I appreciate it, dude.
Happy birthday, Gurk.
I think people just don't understand like how much you can make just selling covered calls. Like it's really hard for like the average person, and no offense to anybody, because like obviously like most of you guys know and or are learning. Nothing beats compounding gains. Compounding gains is it's so sweet. Up 100K on cover calls since August 1st. Nice, dude. Learned a lot. I'm an elderly Brit poor, but I made $100 today. Thanks. Awesome, man. Congratulations. I'm on compounding losses. Well, the more and more capital you generate from like covered calls as your base, the more and more risk you can take other places, right? Like I can go sell GME cover calls way the fuck out of the money and YOLO into all kinds of stupid shit. And I don't care at all, right? But like the goal is to get to a point where you can do that, right? Where you can like take 20% of that capital a week and use it towards growth, right? Towards growing your capital, which are those higher risk positions. I need to set some stops on these SPX calls. Hold on. Do you think European options are disadvantageous compared to American options? I don't really know how often you run into the scenario where you need to exercise early. It's pretty rare. So no. Aspire test 401, is that bullish or bearish? A double top? I mean, this is a higher low, right? So if SPY moves back into the 401, 402 range, higher high, then we're starting an uptrend. What's actually critical here is if we hold this. If this breaks down on a lower high, that's pretty bad. And if I had not followed SS for so long, I could have made so much more from selling my shares when I wanted to and buying back lower. Doing that 3 to 4 times between 25-50, I'd be close to $1 million now. Yeah, a lot of money has been left on the table, but you can't live in the past. I've got a cost basis of 42 on Jimmy and a little over 2,000 shares. Looking to dump those bags on the next big run, then buy back in and start selling covered calls. Does that make sense? Sure. You could sell covered calls now. Nothing's like your cost basis doesn't stop you from selling covered calls. Even if you sell them at $42, right? For like 2 weeks out. It's terrible. Obviously, like the gains on it are atrocious, but they're gains nonetheless. Like they're $8 a contract at 42. But you're selling 20 contracts, right? And now your cost basis is 41.80 or 41.92. I mean, even if you do it that way, in the most risk averse way feasibly possible. So I don't think cost basis is something that stops you from selling covered calls. Real question, how do you determine support lines? Volume, resistance, and price action? Well, volume and price action. Options on stocks where that's important have a big effect. Can you do some quick TA on ZOM? Ooh. And Terra Resources is now up 31 more cents. This is fantastic. Okay, ZOM. Let's take a look at it. So you have a pretty strong like low support. Even here, this one's good. Hmm. So it's found a little support here at the like $92 level. The stronger downside resistance is here though at like well, yeah, 92. So you got a triple bottom here on the 92. It looks good. I mean, it looks like you've got a confirmed bounce. Pulled back up to 95. I'd watch the $98 level for resistance. but it's starting to pull away from its trend, which is bullish, especially over the last few days, and starting to move into this like uptrend. It's got solid support to the downside. Yeah, MACD's starting to cross over. So yeah, it looks good for another move up. I would say like $99 target. Maybe it breaks 100 in the next 2 weeks. It's so much less stressful if you aren't selling covered calls below your cost basis. You know that's really easy to solve that problem super fucking fast on a when GameStop runs. If GameStop runs, like say you have a cost basis of $42 and GameStop hits 50, just sell covered calls at your cost basis. You're gonna get like a minimum of $8 of premium, right? And it's very likely if Jimmy runs this high, the price is gonna fall back down. And now you've just reduced your cost basis by $8. Do that 2-3 times and your cost basis will be like sub $20. If I had a cost basis above like 35 right now, I would wait till the next big run on GME and I would sell covered calls to get my cost basis like, so if I had a cost basis of 35 and we ran to 42, I would sell CCs at like 28 or 32. And I'd sell them for like 30 DTE. Which would net you probably pretty decent premiums. Spy intraday Dorito. Sure. I mean, this whole move is still bearish. I have my stops pretty tight right now on my calls. Why wouldn't they exercise the 42 covered call when Jimmy's at 50? What? If you're selling it far enough out, you're very unlikely to get exercised. And then who gives a shit, right? You sold your shares at your cost basis. Take the premium and sell CSPs. Love the stream and all the great info and knowledge you give us. Do you have any recommended reading order for the books listed on the wiki? My wife's boyfriend said I need to stop losing money. I would start with Securities Analysis and Intelligent Investor. If SPY can hit 401 and stabilize there till next week, can we expect Jamie to linger around 25-26 range through SLD, or will we see a downside? We have some room to the downside, down to like 2250. We could stabilize, but there's a lot of put pressure. But if you have 5 shares at 52, oh, you're fucked. What are the pros and cons of selling all my shares at 50? Let's say cost basis is 40. And then wait until Jimmy is around 25 and re-enter. None? I mean, the Jamie doesn't come down from a move to 50. I think people don't understand just how rare early exercising of calls is. I've been $5 to $10 under the current price on Jamie and still no early exercise. Plenty of time to roll or buy back. It can happen, but usually when people get early exercised on, or you hear the horror stories of, like, you know, being 50 cents in the money and it getting exercised, it's very close to expiration. But if you're selling in, I have never had an in the money covered call exercised after OPEX. Neither in March, May, or June or July. All the in the money calls that I sold during those periods did not get exercised. Some of them were in the money for quite some time too. It can happen, but it's rare. It's really rare. And if the expiration is further out, it's even rarer or less likely. I mean, in March I sold them like $30 in the money. I didn't sell a lot of them $30 in the money, but I sold, I don't know, 15% of my port $30 in the money. 5 days later, we were trading under 150. Rarer. You see Tesla getting past this resistance at 287. I don't know. I haven't really been watching it today. Kind of, I mean, it's kind of following the market trend. I'd have to look at my longer term TA on Tesla. Yeah, Tesla's kind of running like headfirst into some resistance here. Like 288 is pretty strong. 292 is really strong resistance for Tesla. It gets rejected there pretty frequently. But I could see it retesting 292 over the next 4 or 5 days. Tesla's an OPEX stock though, so it has like a little bit of both, and it's a little more unpredictable. Like it follows macro market trends really well, but it's also got a lot of volatility shorting going on. So you see it kind of fall into both categories. It'll run with the market and it'll also run on OPEX. Sometimes the market will rally, Tesla will rally, and then Tesla will rally into OPEX, and you get these huge moves on it that last like quite some time. The Queen is passed, just announced. Sorry to hear that. Fake news on the Queen's death. Okay. Queen died. Does anybody know? Well, she was very, very old. Sorry, one sec. Okay, now we can move on. It would be unpatriotic for the market not to rally. I mean, there's successors to the crown, so you know that oh, what's his name? Charles, yeah, that dude. Chucky boy. He's fucking ancient too. He can't last long. Who's after that? Puts on Northern Ireland. Why? Didn't Brexit violate like the peace accord? Demonetized, yeah. Demonetized for the Queen. They have no border controls between the two to not violate the accord. Hmm. The peace accord predates the EU freedom of movement legislation. People like to forget that part. Now that the Queen is gone, will France invade England again? Oh god, let's hope not. T+2 for Jimmy tomorrow. From what? T+2 from what? From earnings? Nothing happened. Did you look at the cost basis at each broker individually or add them up? I mean, add them up, probably. Queen jokes too soon? I mean, you might be too late for them, actually. She's ancient. That's what happens when you're super fucking old. You die. Everyone here is gonna die at some point. I don't know. I don't really have a lot of like emotion about death. '96 isn't old. Get the fuck out of here. I mean, not the bots, but the people. She ran out of theta. At least she expired in the money, right? Deep in the money. Calls on pork pies, puts on FTSE, calls on Robert Baratheon, puts on Westeros, calls on brothels, puts on King Charles. What am I missing? Sounds like you're ready. Since you're already demonetized, what do you say? Should we hit the top tracks of the year? No. Do you just wait? Do you just wait till I'm demonetized? And you're like, all right, now play all the music? Can you ban all the people that are joking about my relative Liz, please? Listen, Sir Lord Joseph Winchesterton the Fourth of Nottingham, OBE. You're so far down the line in royal ascension or succession that it doesn't even matter. You're like the neighbor's dog's cat. They say kids born today will have an average life of over 100 years old. They clearly, whoever they are, has clearly never experienced American medical care. I still hold the licensing rights to Girk's greatest hits. So did you talk about Nerve up 10%, new life to it, or what? No, not yet. What membership includes Pickles Picks? Dillionaire. I'm thinking about getting rid of the other ones. What do you guys think? The Pigeon Whales want to gift Dillionaire. No, make more levels. No, we don't. Speak for yourself. Well, no, I'm not going to get rid of Pigeon Whale. I just like Long Johnson because of the wiener jokes. Fair enough, Greg. Hurtful Full Beef, welcome to Dillionaire. Thank you so much. Make a $1 level called Pores. It comes with nothing. I think it's bad that it's only been a few hours and they've already killed the corgis. I mean, they had a pact, right? Vasaruk, thank you so much, man. I appreciate it. Thank you guys. Hit me up on the Discord. I'll get you added after the stream. Get rid of the other membership and make a Dillionaire and Pigeon Whale derivatives. I'll consider it. I didn't even mean to trigger a FOMO on membership. How about getting rid of the other levels and lower Dillionaire by $5? But inflation. Is Dillionaire really that ridiculous? I don't know. I feel like it's the minimum amount that someone should have to pay if they want to take trading seriously. Right? Like, if you can't afford $25 a month, should you really be trading options? $50,000 mod level. Thank you, Sasan. Left shoulder starting yesterday at noon. I'm being real cautious with calls. May start buying more puts. Makes sense or no? Yeah, I mean, it does make sense. I'm in both right now, but I just bought some calls from the bottom of this rally. I have stops on them though. I don't expect this rally to move that much higher. I'd be surprised if we retest 401 right now. That would erase my monthly gains. Aveda, thank you so much. I appreciate it. Puts on Bithead's checking account if Dillionaire becomes the bottom rung. What would your target annual return be for Wheeling Spy for Wheeling Memes? Annual return for Wheeling the Spy is like, it depends on how hedged you are, but 16 to 18%. Wheeling Memes, I mean, you could get a lot more. That varies based on the volatility of each one. Spy's actually like kind of shitty to wheel. I know a lot of people do it, but I'm not a fan. September is going to be another NOPEX. We'll see. Who cares? First of all, market maker FTDs do not create price improvement. A 20%, 6% fail rate is not guaranteed like movement on the T+2 plus 35. Not to mention, most of those FTDs are cleared long before the mark long period. Market makers don't just sit on big piles of FTDs. That's like an ETF thing. And that's because in ETFs, they're cash settled. If there's like actual like risk in the security, like they have to find the security to settle, like a market maker would have to do, they just do that shit right away. It's really rare for market makers to run FTDs over an extended period of time. There's a contrarian view that SPY will reach all-time highs before year's end, followed by the mother of all crashes. Can you see a case for this? Winter is coming. No. I think we're like into next quarter we're gonna start seeing diminished margins and reduced expectations across all of the mega and like the large and mega cap corporations. We're gonna see more money start going into commodities, even if we don't get a crash. We're gonna get a big pullback in valuations. You think Fubo will continue moving up for the next few days? I don't know. Did I buy calls on it again? Ah, piece of shit. You buy membership through YouTube? Yeah. I just opened up Discord and saw a weekend at Birdie's gift too soon. We know the queen is passed. Had to work this morning, missed my opportunity to sell CCs. Smart to just wait it out or try to get something for next week's downturn. I mean, you can just, you don't have to wait for a spike to sell them. You can just sell them. Maybe take a slightly more risk averse position because you're not getting them on the spike, but have we entered the most decreased IV period for GME prior to OPEX or still no? It's pretty close. I mean, IV's falling under 100 at the money. Have you ever bought calls in SQQQ? If so, what time frame and in the money or at the money? Yeah, I use SQQQ a little bit, not a lot, but a little bit. Generally no more than like a 3-month holding. $385 through $75. $385 is kind of the low range. But yeah, I have Octobers. That's probably what I'd be targeting. I've been gone for an hour and the spy went on a roller coaster. Can you catch me up? Yeah, it dropped really hard and then bounced back. And now we're going to see if it's going to recover or continue to fail. This is a rising wedge and it's not bullish. It seems unlikely that we would retest 401, at least right now. 30% chance of retesting at 401. Have you looked at Power Ledger blockchain tech? No. For clarification, you sold in the money CC with 30 DTE and they don't exercise? That's wild. I think the second it's above the target, you lose regardless of theta. No. I mean, I had in the money covered calls like through the entirety of the BBBY run. And no one fucking ever exercised them at all. They were at like $15. Look at the worst part. I've been underwater on CCs and rolled for weeks. No one touched them. I think the worst part was I was 10 to 15. At the worst point, I was $10 to $15 in the money. Yeah. If there's a lot of theta on them, like generally the market maker is buying them, right? And they're just holding them as hedges. Are you registered as a professional trader on IBKR? I think so. I think I had to for portfolio margin. It doesn't mean anything. You just get like discounts on trade costs and data. Or they charge you more for data. You get discounts on trade costs. Do you know what I need to do to get access to leveraged items, SQQQ, etc. on IBKR? No? You should just have it? I have no idea why you're not able to trade them. Are the trade discounts worth the increased data costs? Yeah, I don't really use data from IBKR. I mostly just use like the order book and some like scripts that I have for like stop losses and stuff. What's your take on Jamie's partnership with FTX? The same as anyone's take on it, which should be nothing because they didn't really announce anything besides gift cards, which I don't even think are a product yet. I mean, meh, until they announce something more. How is Revlon being aggressively slammed? The stock is traded between like $6.40 and $6.60 for like a week now. It's not being aggressively anything. FTX and Sam Bankman-Fried are a bit sleazy. Doesn't he own like part of Robinhood? Can I buy a couple $4 Fubo Leaps and sell a CC at 450 with limited risk? That's called a poor man's covered call. Whenever we have a green candle, it gets immediately pushed back and we're at 635 now. Who cares? 6, 635, 5. Just, all we care about is up. Big up. 7's not enough. It needs to move up more than that. This is gonna be like fucking Bobby all over again. I can tell. Hey man, Bobby hasn't gone above $5 in 2 days. Come on, Yoons. You're better than that. TMC see any margin or 100 shares? Well, it wouldn't be a poor man's covered call if you had 100 shares. That would kind of defeat the purpose, right? No one tell him it's Bobby 2.0. It's not Bobby 2.0. It's far more illiquid than Bobby. But it also has none of the interest. Are you bullish or bearish on me getting laid tonight? This will affect my approach towards my wife. I'm full bull. You can do it, Carl. Is there a situation where you'd rather sell a call and buy 100 shares over exercising the call? Sure. If the call plus its implied volatility are more expensive than the current at the market price, which can happen. Rare, but it can happen. There's a cuck joke in there somewhere. Don't let Carl off the hook. Carl needs a win. Did you see that CD I found? I did. Spy trend's still bearish. A little less so after the bounce. But if it doesn't break up here, it's a head and shoulders, right? God, it's huge. I should get that on a shower curtain. pillowcase. Ooh. SPX breaking up. Getting an uptrend here. What the fuck is that? Okay, I think someone's banging on my... I'll be right back. All right. Kirk arrested for selling covered calls. Um, no, I didn't die. I just went to pay my respects to the Queen, and now I'm back. What was that knocking so loud? I don't know. They're doing like some kind of fucking work in the hallway. I've never seen a building with more active like construction going on where nothing ever gets done. I filled on Rev 1 on one Rev 35 call for $1. Progress. Nice, dude. Bullish. Guys, stop spamming dancing Gherk. I imagine a red phone next to you rang. You picked up, said, okay, hang up, and then go off stream. Moments later, a helicopter picks you up off the roof of your building, and to England you go. No. That'd be cool, but that's not how my life is. $30 to build a single 100-foot tunnel. In hindsight, do you think RC bought into Bobby too little, too late? Yeah. It probably would have been really good if he'd bought in before they used the $1 billion to buy back shares. A $1 billion loan to buy back shares. It's been so long since a real OPEX on GME. May? May's not that long ago. I mean, what would GME's price be with a tech multiple? 5 to 7x revenue? Significantly higher than it is now. It's not, it's currently at a negative 15 profit to earnings ratio, I think. Might be even worse after yesterday. Yeah, the PE TTM is negative 15, almost negative 16. Where's Fubo? I saw that over 10 years, Bobby bought back like 12 billion in shares, and their market cap went from 12.5 to 0.5. The math was perfect. They haven't even finished their share offering yet, right? Like, there's been no announcement of the share offering completion. I don't think using the setup, the technical setup off of a leveraged ETF is deterministic of market price. Right? Just do the fucking TA on the index. Stefan. Go do the TA on NASDAQ. Oh, hey, Rev moved back up to $6.50. Yoons can finally stop freaking out. What if RC announces a buy-in in Revlon? He wouldn't, because activist investors not going to buy into this company because there's no stock to buy, right? Like the free float is insufficient to gain any type of ownership interest. Maybe we just get up to like 2 days before delisting and Perelman recalls all his shares. I still haven't been able to find a no hedging agreement, so. I sent you super chats while you were away. I was worried sick. Girk's funeral fund? Thank you, John D. Rockefeller. Ooh, Rev's doing weird shit. What's going on here? Someone got some shares to short? Ooh. Bump that volatility. Was that it? $6? What the fuck? This isn't what I pay for. Short the fucking stock, you pussies. There's no news. Citibank won the appeal in the Revlon case. Huh. That's interesting. I'm trying to think of if that's going to do anything to the stock. I don't think so. Oh, they accidentally gave like another creditor a shitload of money that they weren't supposed to. Extra bankrupt. Hmm. This is exciting. My buy order at for 550 is gonna fill. Buy the float. Volume equals fails. Yeah, it's Brandco that's refusing to give the money back. Well, the like lending entity that has control of Brandco. Oh fuck, I just filled on I just filled on two $35 calls at 0.975. God, I hope this hits my 550 by so much. I'm being greedy and have a buy at 5. That's never gonna happen. I'm not gonna get a fill. Motherfucker. Looks like Perlman had a buy at 6. Oh, this stock is totally detached from reality. Biggest news in weeks, and it moved less than $1 down, and then right the fuck back up again. I don't know if it's bearish. It's not really bearish news. What's the deal with SST? I don't know. It's down like 6% today. Man, the SPY can just not break 4. What the fuck? This is bullshit. You know what happened here? Saman sold his stake and Ugo bought his. Now it's up. The stock makes no fucking sense, man. I love it. What's the news? Citibank won their second appeal on the money they accidentally gave away. That news is actually bullish if you stop and think about it. I mean, kind of. It also like frees up the bankruptcy proceedings, right? Wake up, Guybrush and buy a little makeup. Internalize and try to scare the shakeouts. Why you leave the key shot on the table? Oh, fucking Christ. That was some good shit. I can be green, I can be Rev, I can be violent sideways. Yeah. Delisting hearings in October? Yeah, I believe it's October 13th, right? I have a buyer order for more at 90 if I fill. I filled at 95. None of the 90 buy orders filled. I have orders for 100 Jan 35s at 95, 90, 85, 75, and 50. And I filled on 3 contracts at 97.50 or 97.5. Point 97 and a half. Congrats on instantly yeah, but I only got 3 contracts. I have an order for 10,000 shares at 550, but that didn't fill at all. You know what happens? It's the second anybody sells any shares, the market maker immediately has to buy them to hedge the $35 calls. I don't think I understand the rev play or the rev stock or markets at all, really. I think that might be true. Good time to sell CCs on Fubo? Eh. Good a time as any? I don't know. It's doing okay. They're not worth much, but you can sell them. I haven't ordered to buy 1 ref stock at 551. Front running you is my new middle speciality. All right. SPX broke 4. Yeah, it did. Just barely, though. And only for a second. I guess I need to change mine to 552. Oh, Jesus Christ. This is going to become a thing. You know, you guys are going to be above market price in no time. Oh, checking my timer. If they slam Rev and drop IV again, I'm gonna have more than double my current position, I think. Yeah. If it hits 550, I'm gonna have a lot. Hey, the SPY at $400.10. When it's 550, I'll have one more share. You think Fubo Jan 23 $6 calls are too far out of the money? No, I have some 10s for Jan. I have 5s and 10s for Jan 23. I might get some 7s also. Where the fuck is APRN running? Oh, buyback, high cost to borrow, something. Still really low fails though. I don't know. I'm not super excited about it. A lot of other people are. Does SPX usually front run SPY by a few seconds? Not always, but it's, yeah, like, it's generally not that long. There's like fuck tons of high frequency traders that take advantage of like ETF arbitrage. You still bullish on Rev? Yeah. Yeah, I am. Wondering why you didn't average down your Jan 35s. I mean I did technically. I filled on 3 contracts at 97.5 cents. So I have standing orders at lower prices. They just didn't fill. Is it buy order for 10K at 550? Bearish? Very. I'm just buying 10,000 shares for short liquidity. Right? If I can't borrow the shares from someone else, I'll borrow them from myself. I think buy rates, assuming assignment, are perfect for me. Yeah, they're good. Buy rates in a bear market are kind of tricky though, Bones. Fidelity only allows limit prices on options and factors of 5, so 9.5, but not 9.7. Is this a big deal? It seems like a big deal to me, but I want to make sure. No, it's not. And if the option's priced, I think above, what is it, $3, they allow single digit multiples. You ever do a sell right? You ever seen this latest picture of Yellen going around? 19th row in the economy flight. Sign of how bad the economy really is. I don't know. Maybe the government's just like not paying for good flights for her. Maybe they don't like her. All right, I'll be right back. I'm back again. Hey, look, the spy died. Oh shit, did my call stop out? Okay, cool. Oh. Yeah, I heard about Citibank. Do you guys ever do like ridiculous shit with your frozen foods? Like I've taken Stouffer's French bread pizzas and I've put like spicy sopressata on it. The sopressata more expensive than the French bread pizza. But I feel that I've elevated it enough to make it edible. You shouldn't eat frozen foods. They're terrible. Do I actually need to be a lawyer to put Esquire in my name? No, you could just probably say it. Creditors make net 400 million in rev. Bullish? Could be good. It was this. This is what it was. This is how the market reacted. If I go out to the 15-minute, I think it's just one candle. Or 30? 1 hour. Why is it showing me two fucking... There we go. It's just one big candle. Volume was good, though. 1.3 million volume. So, you know, something happened there. For a millionaire, you eat a lot of processed foods. I'm cash poor. You know, my great grandma ate nothing but like Dinty Moore beef stew out of a can and Campbell's soup for like 70 years while simultaneously smoking 2 packs of Virginia Slims and drinking some amount of whiskey daily. And she lived to be like 97. So, fuck it. I don't eat a lot of processed foods, but I do drink a lot and do a fair bit of drugs. Yeah, yeah. She was super fit. That's what she was. Is she was active. She was way more active than she should have been. Popcorn Trader Esquire. By the way, I just passed the bar exam. Congratulations, man. You take it in Louisiana? Been looking out the window for squirrels with my cat for the past 3 hours. Did I miss anything exciting? I don't know. Did you see any squirrels? It's smoke and drink too if I'm a grandson trying to budget my social security for me. No, she kept all her money in the freezer in tinfoil packages. Like wrapped up in aluminum foil in the back of the freezer. We had to put her in an old folks home when she started trying to re-shingle her roof in the middle of August. After she broke her foot on her quad. Is your grandma secretly Jason Bourne? She got up to some crazy shit. What year was she born? Depression era? Yeah, like 1919 or something like that. Nope, she was from deep in the Midwest. No, she's dead. She's not over 100. Sorry for your loss. Don't be. She was crazy and an evil person. Evil zombie grandma stream card. Whatever makes you happy, CTD. When was the last 15 million volume day for GME? Was it August 16th, right? Like 23 million volume or something? I don't know. Someone check that. I could be completely wrong. Wrong grandma. That wasn't the Italian one. August 8th, 17.987. Definitely August 16th. There you go. See, August 16th, 23 million. I don't forget things. Legitimate question. Will having King Charles on all the money crash the British economy? I mean, people are about to buy a lot more crypto, right? When's the next Playing with Pickles Twitch stream? I don't know. I've just been busy. Streaming video games is weird. Maybe I'll do one tonight. We'll see. You guys just you guys just want me to stream 24/7. That's all it is. Showering, waking up in the morning, eating breakfast. One second. ETF FTDs from tomorrow. Hold on. ETF FTDs for tomorrow are from July 22nd. Wait, hold on. Nope, I moved that too far over. July 25th. I'm not cheating on you guys with another stream. That's ridiculous. I don't get what's so strange about 1,300 friends watching one friend they've never met shower. You know what? I can't argue it. Tell the truth, you've been streaming to Marantz Rants followers in your off hours. Marantz Rants has followers? I thought he just yelled at his phone at his house. I mean, his car. But same thing. I love Rev. Bad new break price dips, and we immediately buy contracts. It goes right back up to the original price. Everyone's trying to buy the dip, so there isn't one. Whatever. A million shorts now underwater. Are you streaming the Queen's funeral in 10 days, in sync or performing? Yes. I can feel the energy of the Dans getting riled. If you keep talking about shower streams, we're all going to have to go to our shared bunk. Shower streams. I'd get like a very small pen camera and put it in the corner of the shower. And then I'd be wet. All over. Covered in water. Then soap. Then water again. And then dry. That would be it. I know nothing about the Queen's funeral, but I have to imagine Elton John will play a prominent role. Of course. I just puked in my mouth and then swallowed it? Tyler Soto? That's disgusting. You fed yourself like a baby bird. Air dry? Blow dryer. It just pukes on my desk. Much better. Thanks, Totzel. Jimmy price action brought to you once again by Weeklies. Yup. Going to Nashville for the weekend to see New York Giants shit the bed in their opening game. Any restaurant recommendations? I don't know. What do they eat there? Sweet tea and hot chicken? Eat those things. Sweet tea and hot chicken sounds like CTD and Carl had a made a sex film. Don't get Crystal Burger. It's worse than White Castle, which is terrible, right? You wish. Carl, is your porn name Sweet Tea? Sweet and low tea. It's Darth Invader. My adult film name is the same nickname my parents gave me. Disappointment. Do you think any residential school survivors will be invited to the Queen's funeral? Maybe. As like a send off fuck you from the royal family? Is the royal family petty? I don't know. When London stream? End of the summer. No, next summer. We'll trade from the gherkin. I'll just set up a laptop in the lobby. They can't stop me. Listen, if you can invade countries, you do. Okay? I don't care who you are. If you have the ability to invade other countries, you do it. We do it all the time. Wouldn't weekly calls capitulate on GME? They might have already. Like the second test of like 26. Please don't deport me. I've got pigeon wells and cornichons to look after. The gherkin is my home. Do you think Charles started singing "I Just Can't Wait to Be King" when he heard the news? Isn't it funny that in The Lion King, Simba gets exactly what he wanted, and then he's not happy with it? Typical fucking spoiled rich brat. Are we calling this weekly's pump on GME when it's been down over 40% in 4 weeks? Well, because people bought a lot of weeklies. I cannot seem to be able to type today. Yeah, but then he comes back and kills his dad's brother and becomes king again. That's why I live like Pumbaa. Pumbaa's the best. Thanks for the public shaming, Dad. No problem. I know you're into it. Timon and Pumbaa have a platonic relationship. When you finally started spending gains after being poor, what was your first extravagance? I never spend the gains. That's the secret to not being poor. Yes, Sava's still doing interesting shit. The $30 calls on Sava are probably not a terrible idea. Maybe even $35 calls. I know. I realize what's going on there. I'm well aware of it. Spy's been trash all day. It's just been really fun to play. If you aren't planning on getting married or having children, will you take a ward like Bruce Wayne? It's just Carl. I'll just Carl or Trash. Maybe both of them. Yeah, that way they're not alone. Fun fact, I played Pumbaa in a community musical when I was 12. Can you do this? Did you do the song? The Are You Aching for Some Bacon song? The first is not getting what you want. There are two tragedies in life. The first is not getting what you want, and the second is getting what you want. The disenchantment of the soul's long sought goals leaves a prosaic residue on life. Thanks as always, Girk. Yeah, that was fun. Thanks, Big Diggler. No, I'm actually very happy that I've achieved most of what I want to achieve. Actually, no. There's still a lot of things I want to achieve. That's the problem, is you can't run out of goals. You just have to step your goals up. Of course I did. Yup. At the money IV for GME October and Jan calls still crazy low. I know. Aiming for $1 billion? That'd be cool. But why stop at 1? Saba calls 9/16 play or October? I don't know. Probably October. Slow down there, Bezos. I'd want more than that. Like I can't see myself ever wanting to stop making money. If you had $1 billion, would you buy the Rev float for us? If I had 10 billion, I'd think about it. Is it Bezos or Bezos? Who the fuck cares? We should make a weird little army of pickles and invade Norway. That's worked out for so well for people in the past. Nerve 20% on the day. Exciting. Ooh, it's doing a little rally. What would you do with your doorman once you reach $1 billion? I would send a steady stream of 55-pound packages to the building that he would have to move every single day until his back gave out. It could take years. And then I'll show up at the building I no longer live in and be like, "Ah, man, how's the back, dude?" And then I'll leave. No. See, I've seen him lift. He doesn't use his legs. He lifts with the back. Always with the back. It's cringy. Is it a bad idea to hold cat overnight? I'm 80% up right now. Am I gonna hold my cat overnight? Probably. Is it a bad idea? Yeah, it is. But it worked out well for me yesterday. BTU is still like I mean, it's more money than I want to spend on BTU. Like I'd buy it at 20 or 18. I'd buy more leaps at 20. Probably not shares, but I buy more shares at like 1860, 1875. You know, I've never seen him wear safety glasses. Bezos is pronounced Bezos. The soft H. Be. He doesn't bring the packages up to people's rooms. How did you learn to play cat so well? I stare at these charts, and you always seem to know when to get in before any indicator says so. Seemingly out of nowhere, price turns, and you were right. I know. Don't worry. My ego's big enough, Stefan. You can't inflate it anymore. What the fuck good is he? I told you that already. He serves no purpose. How much do you bench? I don't know. I could probably bench like 200. My BMI? Wait, I had a physical not that long ago and they checked. Hold on. I have to look it up on my lab results on my phone, on my health chart. What are you doing tonight? Lil Shit Boy? Is that my rap name? I like it. Hold on, I gotta check my BMI. Ugh, that's not good. That's 29.88. I am a fat bastard. Huh. How tall are you? 6'3". What's your ice cream mass index? It's okay if you're super muscular, it skews the BMI number. Please teach us something about cat entries. Are futures key? No? Futures are for the future. I don't know, I'm probably like 240, 235, 240. I haven't played cat for years. I didn't start trading cat till last like June or July. Which first? SPX 3900 or 4000? I mean, it's much closer to 4000. Although it looks like it's about to drop, do another big drop. You sell CCs? I don't own any shares of Caterpillar. I've only ever traded options on it. Teach us something about cat entries that makes us go, aha, and then we can apply a similar principle to other trades and we can improve. Nah. I know, yeah, I mean, I know most stocks resistances by heart. Or at least like the local ones in a given time period. Still otterish on Rev? No, full bull. What's CC strike for AMC? Oh, gross. 0? Do they have a 0.5 covered call you can sell? You should have sold those at $70. So did I miss the $23 dip? Could it test again before OPEX? Yeah, it absolutely could. Been waiting on 175 for cat entry. Never got it. Thought I had an entry planned. Waited. Got passed by. Yeah, the market didn't really drop as hard as you would have expected. And the Dow, I mean, the Dow is getting stronger. So's IWM. So when you're trading Dow and IWM stocks, especially right now, make sure you're paying attention to like the performance of the index. Like IWM's already performing better than the SPY. And that's gonna like small and mid caps are going to do better and better over like the next 2 years, as are like big value manufacturers and suppliers that are on the Dow. Because speculative investors are going to move to more efficient small and mid cap companies, right? And value investors are going to safe harbor their money in like shit like Cat, Microsoft, and probably not until after Microsoft reduces its forward projections. Shit like Tootsie Roll, Kroger, Kraft Heinz, Campbell's Soup. They're not a market hedge. Like if the market crashes, they'll all drop, right? But that's where money will go. P&G, how are they doing lately? I haven't really looked into their financials recently. They weren't doing so hot not that long ago. I would point to the 100 shares in an options contract functionally just become the equivalent value of 100 shares. When the delta gets to like 1.0, not 0.99, or very close to 1.0. Tesla dead. No macro. Just copy paste. Should have made a bot last year. Tesla is not doing great, but maybe some upside coming up. They just did a split, so like I told you last time, man, you may have a chance to get out of your shitty position by the end of the year. And then next time, don't bet hundreds and hundreds of dollars out of the money on Tesla into a bear market. Victor. What are your thoughts on next week inflation data on Tuesday and SLD starting Wednesday? If inflation comes in better, what does that do for SLD? Nothing. They're completely unrelated. Any new PT for the SPY? It's still stuck between the two previous ones. Either we break up above 401 or we fail the resistance and drop back down. It hasn't made up its mind yet, and I don't have enough money to influence its direction. Instructions unclear, bot rev 35 Cs. I did a cheeky 13% on Tesla earlier. What is dead may never die. Tesla was decent this morning. How much would I have to pay you to teach me one-on-one about how exactly you play cat? How much money do you have? Stefan. $3.29. I'll make it easy. However much money you have, double that. And I'll have JFresh explain it to you via DM. I'm just kidding. JFresh doesn't make money on options. It's super hard to tell if some people have a lot of money or like no money at all. It is. Devin feverishly taking out loans as we speak. I'll share how I do it. I wait till it goes lower than it has been and looks like it might go back up with the market. Then I buy options. It's weird, but it works sometimes. Nice. You know what it is it drives Stefan insane that he's like watching all of the EMAs and VWAP and he's got all the technical indicators set up, and I'll say something that is not immediately visible in the technical analysis. The stock will then do it, and he has a total fucking meltdown. But thank you for all the knowledge, man. Most times I find myself window shopping with the info and picks you cover, but it's still helping in learning options and making better plays. Thanks, Girk. Thanks, NRG Rocks. I appreciate that, man. Fubo's MAs crossing up relevant on what time frame? Daily? Yeah, it could be. Is Nerve the real play? Not yet. Patience. I mean, you can day trade it. It's like a perfectly good scalp if it starts moving. Your predictions for Rev into next week. I'm gonna say between $6 and $7. It's going up on like no volume. Yeah, well, that's because there's no shares. $6.66 to $6.69. I mean, if my cash secured puts get assigned tomorrow, I'll be buying shares at $5 and like 70, well, $5.68, which may be the best deal I'm gonna get. So, did you buy back your Rev $7 CCs on the dip to 6? No. I'm not quiet. I've been talking this whole time. I could get closer to the microphone and that would make me louder. What do you expect Jimmy to do tomorrow? Nothing. Whoa. No, it just makes you sexier. Through your education, I have learned to offset my bad option plays with risk mitigated picks. What's your prediction for next Rev Vups? Also, can you play the pickle, 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 pickle song? Love you. Jeff G, I got you, fam. Also, next Rev Vups, maybe OPEX. We'll see. It's unpredictable, right? Just get positions when it's cheap. If I blow up my SPX puts because of this, I'm gonna be pissed off. Am I reasonable to target 395, 390 for spy range for SLD? Yeah, I think that's a reasonable range. You never draw pickles anymore. That's not true. Here, I'm gonna draw a pickle chip. Frame it. Pickle coin. I'm looking at the cat chart over the last week. Entry timing is most important. What I need to learn, I would have FOMO'd on Monday at the initial spike and then saw red until today. Yeah, entry positioning is really important. Already worth more than Doge. Did you hear that Princess Diana died? Yeah. That's sad. Why is he so grumpy? Because the market won't drop. I would like a class on better entries. Should take one. Just paper trade and learn. Would you say Michael Burry can be described as both bearish and bullish? So bearish? Sounds spiky. VXX, what mean? What do you mean? It's at $18. Where would you enter MicroStrategy? I'd wait for Bitcoin to bounce. If possible assignment wasn't a concern, is near the money CC not such a bad idea? Oh, I mean, yeah, if it's profitable, awesome. Queen Amidala died? Yeah, I think so. Sounds inefficient. Fumble around until you figure it out versus getting shown what to look for and why. Wrong. Entries are subjective, and learning where you make your best entries is far better of a skill to have than learning where someone else makes theirs, because you will not be able to replicate it. I didn't have a fair share of mentors. For trading, I mean, I just learned it on my own. You know, I had like people I talked to and stuff, but I'm not really sure I picked up anything from them. No, there was no sensei. There was a lot of trial and error. Chipple McPickle? Have a hook for a foot. He has no heels. I didn't graduate high school at 14 and a half. It's 15. No, I was 16. Right? 15 and a half? I guess, yeah, it was before my birthday, so. I didn't intern for Burry in 08. You're about 3 digits worth of IQ ahead of all of us. This is why we struggle to understand your magical abilities. Yeah, I don't think that's true. I think it's a difference in experience. I have years and years of experience. You have a year of experience. Yeah, that's what he is. He's a bread and butter chip. He tastes gross, so he's unhappy. Just did my Forex trade on a call. Thank you, Gurk. Still a lot to learn, but having a blast with you along the way. Thanks, Batty McBadface. Glad to have you here, man. Fubio is being weird. What do you mean? It's 12 cents cheaper than it was earlier. What's Jamie's current price to help the blind? 25.64. I think you have there's two primary types of people that fail in the markets. So try not to be either one of these people. Don't rush it. It takes time. It is part skill and part education, knowledge. And those have to be accumulated, right? That you're not just gonna get it all overnight. So most people, I would say, rush. They rush everything, and they fail a lot really, really fast, and then they're dissuaded from participating in the markets ever again. The other kind of person just doesn't want to put in the effort. They will also ultimately fail. Or you have a gambling addiction. Sure. Started reading The Intelligent Investor today. I didn't see any pictures to color in. Did I get the wrong book? Maybe. Revlon opened today its largest flagship store in India. Do with this information what you will. Cool. Seems super bullish for the stock. At least they're exposing themselves to markets where nobody has a preformed opinion about their products. How many FTDs was Rev supposed to have today? I don't think very many. I gotta run. My wife is back and she hates when I'm playing with my pickle. Thank you for everything. Stay golden, Pickle Man. You too, Nickel Air. You too. Bet you cut the crust off your PB&J. No? I just eat the crust. Crust is delicious. I don't understand eating bread without crust. It's the best part. It's the only part with flavor. Depending on the type of bread. Only eats the crust. You see the latest article about Rev having to give back and accidentally lended 500 million? Well, it wasn't really given to Revlon. It was given to their like IP holdings company, which is under the control of another debtor. What do you spend your money on other than living expenses? Nothing? When Rev squeeze, I'm pretty sure Pickle Jar has locked the float in Jan 35s by now. No, not at all. I will tell you that if anybody comes and buys some Revlon, crazy shit's gonna happen. One second, guys. Bought one share of Rev and nothing happened. It's right there. There's your one share. Did you buy it at 639? Hey, SPX broke up again. Bullish. What if RP? Why are we calling him RP? We'll pull out Rev from Chapter 11 and pushes for a buyout of Rev from a different entity. His daughter is included in the deal to stay as CEO. Probably. I would imagine he wouldn't want her to lose her job. I don't know. Maybe he doesn't like her. RCRP? Is it Royal Canadian Royal Police? What kind of bread do centaurs bake? I have no idea. Remember that Indian company, Reliance, that looked to acquire Revlon? The new Indian flagship is definitely interesting. Any thoughts? Also, love you. Well, thank you, Mr. Gold. I appreciate that. Could be. You take that back. She's the best girl. RP has 7 other children, but he made her the CEO. Shows he has a favorite and 7 slaves for her. You know what I figured out about billionaires is they're shockingly bad at wearing condoms. At what point, like, at what, I really wonder what net worth you're just like, I'm not gonna wear fucking condoms anymore. Who cares? I have a kid, just pay for it, whatever. What's it like to be that wealthy, Zakir? What's the net worth of your average Mormon? I don't know, but I feel like you could definitely Google that. Us poors don't wear condoms. 3 kids here. Well, yeah, but that's different. Is that a semen joke, Bob? Metaphor to explain cover calls? It's like walking up to a stranger in public and being like, hey, do you want to hold my bags for me? Give me $5 and I'll give you my bags. And then you walk away. Except you give them hundreds of bags. And then if the bags aren't worth what they thought they would be, they have to give them back to you. I just got a vasectomy 11 days ago. No kids for me. It sounds like you're never going to be a billionaire. Even Warren Buffett's autistic ass has children. Ding ding. Well, that was a full day of stocks. GME down from its last night high at 28 as people FOMO full force into options that will never print. They'll be selling them off tomorrow. Don't worry. Fubo moving up with the market today and then kind of stagnating in a very similar fashion. Revlon flat, except for that big sell-off that did nothing. Actually, you know what? Basically everything's flat today. Well, the market's up a little bit, which is cool. We'll see how this performs overnight, but maybe we'll see a push up into like the 403, 406 range tomorrow. I think that's about it. I'll clip out the Warren Buffett part. But I'll see you in the morning for Friday, and tomorrow is the anniversary of the Louvre, and we're going to be having a pizza party. Riku. I need a stream card for that, though. Since Trash is homesick. Hashtag not invited. Yeah, I know. Even on the pizza party day, still just work, right? Thank you guys so much. I'll see you bright and early tomorrow morning. Have a good night.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours? No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Crean, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show!
Not an advisor. Frigulon.